and they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself. They not like us, and they know that. They not like us. We ain't gon' do. They not like us, and they know that. They not like us. We ain't gon' do it.
Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house.
My style is the
Good morning, everybody. Good morning, good morning, good morning.
Good morning.
Boom. What's up, dude? How you doing?
Everybody in the chat is requesting for our theme song. It seems like they love the intro, but they need the theme song.
Shoot.
They need the theme song.
Man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Statman.
Boom. Dude, we're getting professional over here. We're almost we're a dang TV show.
Oh yeah.
How you doing, bro?
Good.
Good morning, everybody. Good morning. Brooke, Drez, Scotty, Ty, Turner, the Matrix Brain, EP. We got Wes in the house. Good morning, Wes. Andrew, good morning. Julie, good morning. Orlando Landy, good morning. Carl, good morning. One of the pre-New York session traders, him, Drez, and LD Honest. Good morning, Stan. And there you go. Speaking of them, LD Honest, good morning. Jeff, good morning. Good morning, Nick. Morning, Victor. The time capsule. Good morning. Vinay, good morning. Hey, real quick. We're going to have a really cool stream today. We're going to have JD coming on. JD Astra, he's going to be coming on in about 30-ish minutes. He said he usually trades, or he usually gets on like right before market open. So he's going to be coming on a little bit later. We're going to be going over, just like we normally do, our wargaming. So what we see for the day, and then the trade ideas that we're going to come up with as we kind of see how live price is going into market open. So if you guys get value from this, it's going to be a pretty fun stream this morning. Just go to Twitter, go into the link that I shared, and just share it out if you want to. Get the link out to anybody, or share the stream if you like watching streams, or if you have friends that also like watching live streams. Get this link out to as many people as possible, because all we try to do is just showcase realistic trading using objective statistics, and we do it every single day. We don't win every day. We don't have a 100% win rate, but we show it win, loss, or fail, or flat. We show it all the time. And the reason we do these Monday streams is so that way we can show you guys, kind of anybody once a week can kind of come up here, see how we trade. We do a 3-month boot camp. So real quick, here's the QR code. Pack boot camp led by none other than Mr. Matt Mickey himself here in the stream. And this right here will teach you how we use the daily profiler, how we use statistics, how we structure the day, how we structure our trades. Everything you see us do on stream here, you can learn in a 3-month boot camp right there. And it starts October 18th. So without further ado, I'm going to get into a little bit of analysis. Then I'll hand it over to my buddy, Matt Mickey. What's up, everybody? Oh, no, my Wi-Fi didn't go out. Stop loss didn't get hit, Julie. You guys like that? I spent a lot of time on that intro. More of pocket? Yes, sir. Make sure you hit that like button if you get value from today's stream. Let's get some noise in this house. Henry, what's up? Good morning, M. Barks. Trades don't lie. Love the mute. You guys like that? Nice. We'll start every single week. I'm trying to add more quality to this stream, because we're going to start 2026 out. Pack TV, baby. Mickey on the couch in his onesie is a mood. Are you in a onesie, Mickey? What are you wearing?
Dude, it's a hoodie, but
we gotta see the onesie. We gotta see the onesie.
I'll rock a onesie. Don't get it twisted.
You need to come up here. Oh, I can't get back. There we go. Oh, shoot. Nope. That's not what I want.
Our Christmas live
There we
feed
go.
will have to do like matching pack onesies.
I'll do the bunny the bunny one from the Christmas story.
We're gonna have an ugly sweater live trade stream.
That'd be dope.
What's up, Pippi Banks? Who's Pippi Banks? What's up, Pippi Banks? What's up, bro?
Huge shout out to him. A couple of the pack trade members understand, the importance of number one, low day, high day, 1800, but they've got it zoned down to being able to identify which days of the weeks we like to put in the MAE for the 12-hour cycle, 18 to 06, during that 18-hour. And a couple of the pack trade groups are still hanging on to longs that they took at 1800. So huge shout out to them using stats and just riding it. Good work.
God,
and he's one of them.
Good trade, guys. Yeah, seriously. Y'all are crazy this morning. I'm excited. I'm excited. Do we need profiler and pack? We're coming out with it. Yeah. This upcoming, so the boot camp class graduates this week. We're gonna Wes probably will be able to drop the store this weekend, maybe next weekish. So maybe this weekend. So for those of you that are currently in the boot camp that you're about to graduate, and again, just anybody here watching or listening, I don't make any extra money selling hoodies. I literally make it to where the cost is so small that just Wes gets the majority of the profit. And I literally make just enough to make sure I can get the taxes covered. That's, I don't make it. This was something that a lot of people in the group wanted. So if you guys see this, I'm actually wearing the pack hoodie. So this is, we're going to drop this again. We dropped it early this year. And now we're going to do it early next year or late this year at the end of this boot camp. So that way, anybody that didn't get it last time can get it this time. All right, guys, let's get into some markets. All right. So first thing I do when I'm breaking down, looking for kind of the context of if we are going to have any sort of mean reversion, first thing I'm looking at is where we at within the highs and lows of days and where are my footprints. So currently drop down to the 5 minute, you can see, and it doesn't matter, 5 minutes, 60 minutes, doesn't matter. I'm just finding the high and low of day. And so right now we have an in statistic low of day. Because the 4 major times we make a higher low of day, 1800, 3 a.m., market open, market close. And all this does is it just lets me have the process of elimination to see which high or low of day is most likely going to be taken. And if we know that this is an out of stat high of day, then most likely, okay, because that's all trading is. Trading is literally just probabilities. Most likely the highest probable scenario is if we're above the P12 mid, if we have an in statistic low of day, then most likely this is the next high to be taken for the next checkpoint in price. Next thing I look at is, okay, where we at and where we positioned at within the statistics of the day. So the statistics of the day is all of the levels that are relevant. Okay, so I first see, are we above or below midnight open? This is midnight open, the solid yellow line. P12 mid is the dotted line. P12 mid is the midpoint between the high and the low between 1800 to 6 a.m. Next thing I look at is the opening prices 1 through 7 a.m. So opening prices 1 through 7 a.m. This just allows me to see where we overextended, because typically we range more than we trend intraday. And these opening prices actually prove this, because we know that starting at 8 a.m., let's just take the 3 a.m. example. The 3 a.m. opening price starting at 8 a.m. to noon has an 80% chance in the past 75 days. We've retraced the 3 a.m. open starting at 8 a.m. 80% of the time. And you'll kind of find that a lot of these opening prices have a lot of high probabilities because we range more than we trend. We typically at least once retrace what we did overnight, and these opening prices are the objective fact to that. And so these levels, when we're overextended like you see right now, where we're starting to create all statistics in a single direction, this overextension allows me to see, number one, how far. So you'll hear people a lot when they trade, they'll say, man, this looks overextended or oversold or overbought. But do we actually have a number to objectively say if something is overbought or oversold? Well, here we can actually see that. We can see we're starting to get to the point where we're getting overextended. And also from a distance standpoint, look at how much distance we're starting to create from, let's just say, the 1 a.m. opening price. Let's just say midnight open. From midnight open to where we're at right now, that's about a 0.3% price movement away. So that's a lot of distance for somebody like myself that I'm just trying to take a piece of the market and be done for the day. And when we have a lot of this distance, this gives a lot of opportunity for just a portion of the overall intended direction. And that's why I love trading this way. And then the final thing that gives me just icing on the cake is the daily profiler. The daily profiler gives us nuances into the highs and lows of days. So like, let's say if this 1800 has a low of day, what is the potential high of day for this specific scenario? And then the statistics of the levels. So of this given configuration, we know that midnight open generically has a 65 to 68% probability of being retraced. But what are the specific probabilities of this specific type of how price moves overnight? So the daily profiler gives us that specific probability, gives us the specific probability of P12 mid, gives us the specific probability of where we could, if we're going to maybe correct to then go higher, where is that correction going to be? And so this allows me to tailor myself to see, okay, well, if I'm going to take a midnight open trade, or if I'm going to take a market open trade, what is the expectation of price? Are we going to reverse firecracker to all these statistics to the downside to get a really good extended cash flow trade? Or are we going to break above market open, respect this high of day, make a new high of day later on in the market open session? Or if we trade this market open high for a new high after market open, so let's say 10:30, 11, somewhere around there, then we know that due to the process of elimination of the 4 major times to make the high or low of day, if we have made the low of day at 1800, it's impossible to make the high or low of day at 3 a.m. And then market open has no significant high or low. The next major checkpoint in price, the next major checkpoint to make a high would be end of day. And so to summarize it up before I pass it off to Mickey here, in summary, the trade ideas that I'm looking for this morning is if we take out the final statistics above price, meaning these bullish levels here, this level here, and this is an indicator the pack has. This just shows us specific levels with probabilities attached to them. So this level in the past 75 days has been hit 96% of the time, 93% of the time. And so this is the final little quality assurance checkpoint that I can do to see where is live price purely overextended to where there's no other probability that price could go against me. And so in this case here, I want to see these final levels be taken. And if these levels get taken in the pre-market, and I'll obviously tell you guys, I will be looking at a midnight retracement trade of a short for 0.12%. But the final thing that once we take this is I need bearish distribution. So I need a bearish distribution to print on my chart. Then I'm going to take a cash flow 0.12% short to the downside for a potential midnight open trade. If I don't get that scenario, the next major trade that I'm looking for is if now that we have this at a statistic high of day at 6:20, we don't typically make a high of day at 6:20 a.m. The next checkpoint for price to make a new high is going to be market open. So if I take the high and the low of the first 1 minute 9:30 candle, that's what I'm doing right here to simulate. If we come up and let's say we make a high of day at right around here at market open, I will do extended cash flow shorts to the downside below market open for these final statistics. If we break to the upside, because this is that firecracker move. The firecracker move is when we have all statistics overextended in a singular direction with overnight making a single move. And then the firecracker is more often than not a heavy mean reversion to a lot of these statistics. And then either we just correct, and this is like the net, and we keep on going higher, or we firecracker and maybe break and try to retest this P12 mid. But either way, that as a cash flow driven trader, I'm not even worried about all the other stuff price could do. I just see that there's opportunity that if we open up the market here, there is a lot of distance to a lot of these objective probabilities. And if there's a lot of distance to a lot of these objective probabilities, and I just want a piece of that overall distance, This allows me to say that if I'm looking for shorts, I can get extended cash flow shorts to the downside. If I'm looking for longs, if we break above market open and stay above market open by 9:45 to 10, the probability that we retrace to midnight open falls. The probability to retrace a lot of these statistics falls. And so by 9:45 to 10, if we're number one, above market open, number two, if I'm still long, I will extend my target to the upside, or I'll just take a cash flow long and call it a day. So that is my trade ideas. That's what I'm looking for going into this morning. Mickey, over to you.
All right, let's get my screen on the.
It says you need to share it. You got it? Oh,
Yeah.
my bad, dude. I didn't have it
There
enabled.
we go. All right, no worries. All right, so starting on the daily chart, for the month of September, we're above previous month 50%. All right, we're above NFP Friday. We got closes, so we anticipated monthly close prices to be higher. We knew that this stat, when we're above NFP Friday, previous month 50%, 70% green days, 30% red days. We got a good mixture of that, right? And so now we're going into a new month, same rules. Like if you're managing swing positions or 401ks or anything like that, you've been in the clear all month to stay risk on with that, right? So we introduced the candle science over the weekend and we ran the stats on it, and huge shout out to people like T Trades and Argo, I don't know his name, but they were the brains behind this concept. But basically we built this awesome little dashboard to tell us to take the last two candles from the daily or the H1 or the H12 or the 2 hour, 3 hour, 4 hour, 6 hour, 8 hour, monthly, whatever, weekly, whatever. And so you put the characteristics of what the first candle did, the second candle, to get the probabilities of the third candle. And so a couple of updates coming to this. Eventually this will be a 5 candle display. But either way, right, you put it in and then you get the stats for that current candle. And we did that yesterday morning at 5:30 on Sunday to say, this is C1 and this is C2. What are the probabilities of this daily candle? Well, we had a 52% probability of gapping up, right? We had, what's up?
We just went long New York 1, just let you know.
Oh, nice. Cool. So we have a 73% chance of closing above Friday's low, right? We had a 60% chance of closing above Friday's open. There's a 65% chance of closing below Friday's settlement, but there's a 69% chance, 69% probabilities that we would get above previous day high, right? So we'll get into that once we look at the daily intraday daily profiler, right? Coming into the weekly, right? So we opened at previous week 50%, right? When we were below Tuesday 9:30 to 10:30, and then right out the gate we started ripping up, right? We missed a 91% probability that is right here at 6.5 at 9, right? But now live price is telling us currently we only, and this is a weekly level, we only care about the 9%. We don't care about this 91%, right? Because we're above Sunday, and we're going to go into the intraday now, right? So long story short, we're not locking in a low or a high of the week yet, but there is probabilities. I think it was 26 out of the last 56 weeks, right? Something crazy where Sunday put in the low of the week. So we do have that over the last year. Don't quote me on that one. Let me see. Let me go to that chat real quick. 28 out of the 52 weeks had the opening candle be the low of the week, right? So that's a characteristic this year is showing us, right? So now moving on to what happened, and Austin did a great job identifying it, right? So we opened up at the previous day mid and the previous week mid, right? We stepped above it, the previous day mid, and then we started breaking out to the upside, right? And those who went through the boot camp understood the characteristics of the first 5 minutes of the open, right? And we're able to capture longs right around here and ride it all the way throughout the night, right? And then we get the perfect 3-hour line here, perfect 3-hour line here, apex here, and then 3-hour line here, apex here, and we're going into 9 o'clock now, All right, so overnight, primarily it was long, true, none, none, and we're long out here, right? So, right, we know that when we come in to the daily profile and we put long, true, none for Asia and London, and New York 1 is long, we can see that there's a 65% probability that it will turn false, meaning there's a 65% chance that we make it back to this line right here, the 730 to 830 low, right? There is, but that comes with a caveat, right? It has to happen by 10 o'clock or we're not coming false. This 65% probability will now turn every single minute we pass 10 o'clock without crossing that 730, 830 low. Like this probability is dropping dramatically, right? So we'll have that in the back of our mind if we see 930 give us a sell, right? All right. So now we're going to put false here. And even if we don't select anything, that 1800 low of the day is locked in, right? And that we have a possibility of a higher day between 930 and 945, which would support that false, or a true, which would support intraday high day, right? So looking at the false, we can see low of the day is 1800 to 1815, 0.1 to 0.2, and then it supports a 930 to 10 o'clock higher day, right? If that's the case, then that London OU has an 85% probability of being broken. But in the same scenario, if we can't do it by 10 o'clock, data drops off into anomaly land. And so we have to let that 85% probability go because live price is telling us it cares about the 15% of the time, not the 85% of the time, right? Some other levels that we have below us that are very attractive, P12 mid, 82, right? We will extend this one out to 11 o'clock, right? Even though the mode in the median of this data set is from 930 to 945, we still got to give it some wiggle room to breathe, right? And then let's look at our time-based probabilities. So we've looked at our structure-based probabilities already. Now we're going to look at our time-based probabilities. We see that this midnight open, Globex open and settlement have below 50, right, probabilities. So that supports the low of the day as well, because that's where they are. But this midnight has a 70%. And then you can see that the mode to median, 930 to 1015, cluster of data right here. And then it drops off and it cares about the 30% over everything else. Now we know settlement is known for having a high probability Monday retrace. However, this drops off significantly today because of the formation of Asia, London, and New York 1 right now, right? So it's only a 54% probability now, right? All right, so if we go true, right, then it drops even lower. And so do the midnight, the settlements, the Globex, right? So this is very easy to understand because I'm not a two-sided trader. I don't buy dips and sell rips all throughout the day. My job is to identify which one am I supposed to be buying and aligning it with a low day or higher day, and are we in the body of the daily candle or are we not? Well, based off the daily profile, we can see whether it's true, New York 1, or false, that 1800 lower day is significant. So my job today is to buy all dips, right? So put in our high day, low day data on here, we can see, and put in long true, long false, we can see that this is the reversal zone if 930 is going to bring us back down, right? To get these probabilities right here, right? London OU and P12 mid, right? Then we should reverse somewhere in here between 930 and 10 o'clock, right? And we're there right now, right? It doesn't mean that we're going to come take out this day low, but we could. But right here, we're going to look at place longs. But for us to even consider that, like any kind of targets here, we've got to get, for this reversal, we've got to get below this P12 high, right? This previous 12-hour high. Now, we do know a couple of things about Friday. Friday was an inside day, right? Meaning that it stayed, the high to the low was inside of Thursday's body, right? So that supports this reversal as well, right? And we know that this is the higher probability, but we don't fight momentum. And right now, daily momentum is up, 12-hour momentum's up, 6-hour momentum's up, 4-hour momentum's up, 3-hour momentum's up, 1-hour momentum's up, 30-minute momentum's up, 15-minute momentum's up. We don't fight that. So we have to do this in a way, if this is going to happen, right? In a way where we are doing obvious steps to take that sell. And so the way I do it is I take the 9 o'clock box, right? We're going to say this is the 9 o'clock hour, right? And we're going to focus on a couple of things here, right? And we're going to say this is the 9:30 open. Right here. This little box represents the 9:30 open. Right? We're going to do this in a 4-step to take any sells, right? And I won't even consider sells today, right? I will only consider longs. But if I was to sell, step 1, get below 9:30. The 1 minute 9:30 high to low. Step 2, get below 9 o'clock's 50%. Step 3, 10 o'clock needs to take out 9 o'clock's low. Step 4, 10 o'clock within the first 15 minutes needs to bounce off of this 50%, the footprint up top, the 9:30 somewhere during the first 15 minutes. 2, put an instat high of the hour in, and then I will authorize sells, and then we obviously have to be below P12 high, right? If that's the case, right? If we cannot do those 4 steps, and let's say we just do something like this, 9:30 gives us the sell, and then 9:45 we reverse and step back above 9:30, right? Like I'll start taking longs for 10 basis points. The problem of the day is that we actually have 100 handles left, right? So I'll initiate captain backtest longs. I'll initiate 05 breakouts longs. I'll initiate 3-hour lines longs. So, and all that. But I'm going to be very strategic with where I take the longs, because this thing can reverse between 9:30 and 10 at any given moment, right? And then come and firecracker to the downside, right? Now, we've used most of our daily distro. Let me erase all this. Right? So over the last 10 days, the 10-day median range has been 266, which we can justify the long true. We can't account for, I mean, we can account for all that distro being spent with the long false. We can't account for the long true, right? Meaning if we are going to make it to this high day for the long true, we're going to have to put about 50 more handles in, right, to accept that, right? And New York 2, after lunch, will kind of confirm that with how the hours go. All right, so with that being said, my plan is to target longs, preferably around this area right here where London OU and P12 mid is, which is about 30 handles. All right, so with that being said, I need to take his phone call, Austin, so I'm going to hand it back to you.
Appreciate you, man.
All right,
No
brother.
worries. We got a question in the chat here. Let's see, D3. D3 says, I wonder if there are already made and tested models that can be used with these stats, or I have to figure out how to use them to create. So this is the thing, D3. We don't, and I think I've seen you around here before. We don't teach a singular strategy. Okay, so these statistics that you guys see us use, we teach how to format a process, a specific framework, but of that framework, you can literally mold it to however you trade. And what I mean by that, when, like, because I say framework, right, all these flashy words, all I'm literally meaning is if I see something, if I know how to structure my day with the highs and the lows, if I know the highest probable profile of it, that's why it's called daily profile. If I know the highest probable, not guaranteed, we're not predicting, but if I know the highest probable profile of just exactly what Mickey went over, I can have a strategy around any of it. I can be a breakout trader. I can be a pullback trader. I can be a supply and resist. We have ICT traders. We got supply and we have volume traders. I mean, there's all kinds of people in the community that they use these statistics, and that's why I'm calling it a framework. It's a framework, and then how you mold it into your own way of trading is completely up to you. And so that's
Hey,
why.
awesome.
What's up?
I'm gonna be offline for about 5 to 10 minutes, all right? And then I'll be back on.
Yeah.
I'll stay on, but just letting you know. But make sure
Yeah,
you
no
talk
worries,
to him about turning systems on and off and adjusting TP and risk pressure position sizing with that question.
Yeah.
Thanks.
Yeah, absolutely. And yeah, no worries, man. But basically is like it's nothing we do is a singular strategy. I can't emphasize that enough. And exactly what Mickey is saying about turning your systems on and off, adjusting targets, it's all with what we do. Is what we're trying to do is show you clear expectations of high probable price movements within the daily candle. That's genuinely it. Some days we're going to have, and when I say expectations, well, if at market open, if right here at market open, we break to the downside, if I just was trading with no statistics, if I had just a pure, and you hear this and see this on social media all the time, when your entry sets up, you use a stop loss of some kind, you put it generically, like let's say you either use a 13, like you'll hear this sometimes. People say, my stop losses are always 10 points, or my stop losses are always above previous high, or my MITP is always a 4 risk to reward, or it's always 50 points. When you're always using these generic terms to structure your risk management, you fall into this thing of what's called overfitting, where you're basing your strategy and how you're managing risk purely on historic data in terms of where you're putting your stop and where you're putting your TP. What we're trying to do is detach you from thinking that it has to be a static number or it has to be a static way of thinking about anything, because the market isn't static. The market is dynamic. The market creates all types of different little micro nuances. And if you always keep your risk static, you're not going to be able to account for those nuances. And so how do we account for those nuances? We use objective statistics, and we see how far and what the distance is away from wherever we're getting in. And that expectation now gives us a clear, realistic view that, okay, well, if my entry presents here, if I'm looking for shorts, okay, well, I know that all these levels are here with high probabilities. I know the opening prices are here. What Mickey was saying with that pullback, I know the pullback could net to in between the midnight open and P12 mid. I have a clear, realistic expectation that if I am looking for shorts, I'm not going to be shorting to zero, right? I'm not going to be just putting an arbitrary TP at 130 points because that's what my back test said. I'm putting my target somewhere that has a high probability of being because that's why we trade, right? Like, why do we place a TP? We place a TP because it has a chance of hitting take profit. Same thing. And then the opposite for a stop loss. If I just generically every single time place my stop loss, let's say, I don't know, let's say I always used a rule of my stop is always going to be 10 points. But what if we have a high volatile day? That 10 points could be a fart, right? Like the NASDAQ could just fart and move 10 points in 5 seconds, right? It's crazy. And then the other thing is, what if the invalidation that makes your specific entry gets invalidated and it just takes a little bit longer to get invalidated? Like, again, my invalidation is market open. Anything below market open is bearish because that's the regular trading hours. That is when you can open up Robinhood and buy your stocks. That's when everybody in the world, the retail, can actually engage in the market, not just futures. So in this case here, if we're accepting below the regular trading hours, that's just objectively bearish. There's nothing else I have to say other than just we're below, and then same thing for above. And so the invalidation, to invalidate my reasoning for short, is this live price action component with market open being here, and let's say market open with an invalidation to the other side of market open, whatever the case may be. And so what we are trying to teach and showcase is that right there, being dynamic with the market with objective statistics. So all that to be said, I hope that answered your question, D3, and anybody else that maybe had that question or had that thought in their mind. Is we're not a community where it's like, we're all trading exactly the same strategy, looking at the same entry, looking at the same thing. No, because trading isn't like that, right? Like trading is so individual and it's so specific to you, the trader, the operator. And that's what we try to recognize and try to create, is something to where we're just giving you the tool. And then it's up to you on how you want to use that tool. Carl says the data and backtesting provides a framework to view live price through. It will help you from being on the wrong side of the trade and execute your way. Exactly. And that right there, keyword is confidence. That's it. Like 90% of day trading, well, actually 100% of day trading is what? Execution. Because we can all talk theory all day long. We can say that something is going to happen, that this level is going to get hit, or this does this, or this does that. But in all actuality, you're not going to get rewarded if you don't execute. And so you need consistent execution. You need a way to consistently execute in the market, so that way you have consistent results of that execution. Now, I'm not saying results being, it's just magically going to be good. It can also be consistently bad results, but you need that consistent execution to get actual feedback from the market to see if your edge is profitable or if it's not. So what feeds that consistent execution? Confidence and objectivity, right? Like if I'm objective, if I have confidence that behind door A is a 50-50 shot and behind door B is a 51% shot of being a millionaire, objectively, everybody's going to choose B. Why? Because it has a higher odd. It has a higher probability. That's all trading is. That's all we try to do as traders. We're not trying to predict like certainty. We're not trying to say this is exactly going to happen. Like if you see my chart right here, I'm not looking at this market and saying we have to get to this level that has an 86%, because guess what's on the other side of 86? There's still another portion of probability out there where we didn't retrace that level. We didn't come back to the 4 a.m. open. We didn't come back to the 3 a.m. open. So there's still going to be high probabilities, but those high probabilities can still be wrong. And so that's all we're doing, is we're taking confidence in objective numbers that anybody can measure. And that's what gives me anyways, and a lot of people here, that's what gives us consistent execution. That's what gives us the ability to consistently execute. That's what gives you the ability to execute when you're having a bad day, when you're having a red week. That's what gives you the ability to consistently execute when you're in drawdown. Okay, because we all build strategies. A lot of people build stuff to win, but we don't build strategies and we don't think of how to trade to win a trade. We do this to like be the, kind of like Tom Hogarth, best loser. In all seriousness, without being cliche or anything, that's what we're doing. Because every time I execute, I'm not executing from, okay, this trade has to win. I'm actually executing from the mindset of what happens if this trade doesn't work? What's like the flip side? Like when and you'll hear this, you'll hear, we try to talk through our trades every single time when the market's open and we're getting into a trade. You'll hear this. And that's the reason why I talk out loud when I'm thinking out loud when I'm trading, because I want you guys to understand what's going on in my mind, because that's pretty important. So when I'm structuring a trade, I'm not looking at that trade like, what's the most I can put on this trade to make the most money? I'm actually looking at that trade saying, when I'm putting on this trade, how am I going to like feel? And what's that going to look like as a business if this trade doesn't work out? Because if it has high probabilities, the side effect of using high probabilities long-term is that means I'm going to win trades. That means I'm going to have winners, right? Like I don't have to worry about having a successful trade. You guys might even see us take a red day today. You guys might see me lose a trade. I don't know. But it's not about that single trade outcome. It's about a series of trades. It's about a series of probabilities, not just this day here. And so when I'm looking at everything that I'm doing, I'm looking at it from the sense of how can I protect my downside, because my upside has already a level of consistency baked into it. Because guys, if you flip a coin, let's just be real for a second, because market's about to open, JD's about to come up here, and I kind of want to get this out. You have a 50-50 shot. Let's be real for a second. You have a 50-50 shot at just successfully hitting a trade. I could go on my chart right now and I could just plot right here, go long. And I have a 50-50 shot exactly where I drew this line, that at 5 points, I have a 50-50 shot of being right. Just randomly. Just absolute randomly. And I also have a 50-50 shot of being wrong. And so if winning, okay, if getting on the other side of a trade successfully is just sometimes random, completely happenstance, and then I get to use statistics that are objectively measured, they're objectively repeatable, above a 50% odd, right? When I'm targeting trades, when I have targets, they have targets based on probabilities. If I'm targeting the P12 mid, and I know that in the past 100 days, the P12 mid has been hit 85% of the time, 80% of the time, the target, the thing that I'm saying price could go to, has been hit 80% of the time, 70% of the time, 50, 60% of the, whatever target I'm choosing. If my target, if my intended target has an above a 50% odd, I have a great edge. I have an edge that is going to be consistent over time. So winning a trade is natural. Winning a trade is not a side effect of me or Mickey or even JD coming up here. Winning a trade isn't the product of being a genius or the best trader ever. It's actually the opposite. It's actually, when you're looking at a trade, what's actually the worst that can happen? And how can I protect that so that way I can let my edge, when the edge and the market is agreeing, I can just let them two work it out. I can let my edge and the market do all the drama and work out when I'm going to get paid and when I'm not. Me, Austin, the operator, the trader, I just have to focus on protecting my downside and respecting my stop losses, respecting the times that I go red. That's all I got to do. That's why we're so passionate about statistics, is because statistics, and when you're using objective numbers, they kind of give you the ability to have a sort of consistency just baked in, because like I said, you're targeting consistent things. You're targeting a consistent hit. So you don't have to worry about, oh my God, is this the TP that's going to happen? Is this the TP that's going to get hit? We don't have to worry about that. And look right here. Look, we just did this live. We just went 5 points, completely random. I just randomly was like, I'm right here. Let's just say I clicked the long right here. Look, completely random. I bottom ticked this candle. You guys see what I'm saying? Do we kind of like, can you guys let me know in the chat, is this making sense? Because these are the things that Mickey and I kind of get a little bit frustrated on when people are like, look at me, man. Look at me. I bottom ticked the market. Well, cool. But just understand that there is a certain degree that you can just literally be lucky. There is a certain degree of just luck involved. And I think the people that willfully stay naive to that, and they think that the way they trade is the way the market moves, I honestly think those people have a harder time accepting losses, because that's the name of this game, is just accepting business expenses. I think when you think that the way that you trade is the way the market actually moves, it's a lot tougher to take those red days. And that's just me speaking personally. When the boss JD comes, should be any minute. See, he said, let me see. He said he usually hops on his streams around like 9:15.
Another 5 minutes to be on. He just messaged in the private chat.
Oh, okay. ETA about 10 minutes. There we go. So yeah, about 9:15. He don't want none of this boring nerd talk. All right. But just to kind of give a little intro to JD, I've been following JD, watching him, kind of just admiring what he's doing with his own trading for about like a year and a half, maybe 2 years now. And we've had some discussions. We've talked a few times, but one thing I kind of had as a goal at the beginning of this year is just to trade with more people, right? Mickey and I said, you know what? We're going to take this and run with it. We're going to try to build this company, and we're going to try to make this community the best community out there. So while we're doing that, I want to network with other people. I want to see how many other traders and kind of learn and understand from other perspectives, and see how, just using statistics, like, is there any value in seeing how other people trade? And then just, is there a statistic that could maybe make this edge even sharper? Right. Or just have fun, like just have a good time having people that really trade, right? JD live trades. JD shares his screen just like we do. And that's the people I want to connect with. I want people to come on here, Because in 2026 we're going to be starting Pack TV, so we're going to have just like kind of around the clock trading on Mondays, where we kind of showcase everything we do, starting from Asia to London to pre-New York wargaming with Mickey, pre-New York trading with El Dionis, Carl, and Drez. Mickey and I coming on doing what you guys see us doing now. PTFX, Cody coming in for the late New York session. Then in the PM session, we got Pocket. He trades the PM session. So we literally have traders in the pack. we almost have every session covered. So yeah, it was 15K of advice. I hope you guys got value from it. Hey, good morning, Amir. What's up, Amir? Don't give them all the downside firecracker. We'll see. We'll be patient. We'll be patient. We'll be patient. Like I said, my stance still stands. We have a long on New York 1. So we generically have a more probability than not of coming back to this low right here. So this low that we made in New York 1, if we go through the variables today, so we are long, true for Asia. If we turn on the daily profiler, see where Asia OU is, Asia OU all the way down here. So most likely it's not going to get broken today, so I'm not going to account for that. London is long, true. London here. It could be broken, so I'm going to go ahead and account for London being broken. And New York 1 is long and strong, baby. We have a really good hive day, like Mickey was saying here, with the 9:30 to 10:45. Really good low day for a long false projection. We also have a really good long true projection. So honestly, now it's just, do we go with the red pill or the green pill? All right. So what you guys just see me type in here, if anybody's new, just typing in the projections of where the highs and lows of days could be, given the how prices reacted overnight and going into this pre-market. So if we go false, meaning we come down here to take this low, we have a high statistical chance of coming up to make a new high of day. If we go true, new high of day later. And I think I just heard a little bleep here. What's up, JD? Welcome in.
Yo, what's up, guys?
Not much, man.
How we doing?
Good. This market this morning is looking pretty nice for market open.
Yeah, we got quite the expansion overnight. Midnight sitting down there, pretty far away. We'd like to see maybe one pop at open. We do have an SMT.
We what we normally like to do, JD, is so we'll kind of go through a little bit of analysis and some trade ideas or whatever we're trying to like do to account for different probabilities of what market open could do. So if you want to kind of, we got about 10 minutes till we kind of get focused for market open. Do you want to kind of run through how you analyze or kind of go through what your war game is and then going into your session?
Sure. Yeah. I mean, typically I like, first thing I look at, where do we open up overnight? What kind of movement we had, where are we at relative to midnight at the moment, premium discount relative to that, and then where we're at relative to 7:30 a.m. open. So those are kind of the three main things I look at. And so right now, well extended up into the premium above midnight here. So days like these, I would, prefer maybe one manipulation up higher, maybe take out one more high, and then look to see if I get some sort of signature, setting up a short, and then maybe try for that short towards 7:30 a.m. open as like my first target. And if we can break through
Nice.
that, close below that, target midnight. So see what we get. NFP week, Monday could be a little funky. So
And this is why I like having people on street. Like, this is why, in my opinion, I find the most value when I hang with people to just literally hear your perspective, because it also kind of shows we're all looking at the same chart, just in our own little nuance. Because you just said something kind of funny. You said and you do. We've talked about this before, right? You love the 7:30 a.m. open. Well, if we take the 7:30 a.m. open, you see my screen here. This is the 7:30 opening price, guys. This low for us is very significant for if we are going to go short, because this low, so this is what we call our New York 1 range, which is just from 7:30 to 8:30. And so because we took this high, we have specifically today, we have an 81% probability with these specific, with exactly what we did overnight with the specific live price action we've had today. We have an 81.1% chance of taking out this low at 853.75. And look how that is like right in line with your
like
7:30 open.
Yeah. Nice. Yeah. So we'll see what we get here at the open. I was kind of hoping they would have taken out that high from last Wednesday, that 24,913.
Okay. So you look at like even previous weeks and days, highs and lows.
Mm-hmm. But I'm open to a short right at the bell, but I'm going to just sit it out and see what happens.
When do you primarily, like, I guess, engage? Like, you're kind of like looking around market open, but when do you primarily look to click the button?
Every once in a while, right off the open, if there's like a nice little soup attempt. But other than that, if I don't see that set up, then closer to like 9:45, a little bit after that, between 9:45 and 10 o'clock.
Gotcha. Welcome, everybody. Yeah, it looks like we got a bunch of people from your community over here.
Nice, let's go.
If you guys are from JD's community, let me know in the chat. We got Keto Vegas, Cadale, JE. Let's see some new faces here. Stefan Seiler. What's going on, everybody? Welcome. And no pressure. If you want to share your screen, what we like to do is when we're looking at what we're doing or we're about to, you just literally like you do. We tell everybody, okay, this is where we're going to get in. This is why, kind of explain the context of everything.
Yeah. Sounds good. Yeah, we can rotate around.
And then one thing that we look at, JD, is we really love, do you ever look at the highs and lows of days at all?
Yeah.
So one thing that we love is within the high a day and low a day, statistically, we have 4 major times that we can make a higher low of day. So usually we'll have a higher low of day at 1800, 3 a.m., market open or market close. And it's within usually plus or minus an hour. It doesn't have to be, on the dot. Mm-hmm. And when we have, like in this case here, when we have a really good low of day, and we have an out of statistic high of day like we have right now, we don't typically make the high or the wick of the daily candle at 856. And so what this kind of gives us context going into the market open is if we know that by just the process of elimination, this high is due to be taken at the next checkpoint of time, then we can see that, okay, well, 9:30, we're coming up here in a few minutes. So if 9:30 comes out to make this high and we have an in statistic high, and then let's say the high and the low of the 9:30 candle looks something like this, then if we break below, we're accepting live price action to the downside, which then I can take shorts to the downside towards all these statistics here. Or do we make a new high of day, break above market open, and then by 9:45 to 10, this is the real cheat code that the market loves to tell us, because by 9:45 to 10, if we're also accepting bullish pricing, what are we doing? We're falling outside of that statistical time frame to make a high of day. And then now by the process of elimination, we only have one final time to make a new high of day that usually we do, which will be end of day. And so that's kind of how we use the highs and lows of days. Is there anything different or anything unique that you do?
That's pretty on par with
The
what I'm
one-
looking for as well. I mean, yeah,
I'm back.
that makes
So
sense.
the one thing that you said that I really like is the 945, right? So
Mhm.
like obviously like so if you look at my screen real quick, based off of what Asia, London, and New York 1 has done, like the highest probability is this green line for the next 3 hours, right? And this major pivot, right? It has probabilities. Like the highest probability is for this major pivot to happen between 9:30 and 9:44. The second highest is 9:44 to 9:45. So like we expect that pump. The less probability is this red pill where we plant the high between 9 and 9:15 and then start selling off, right? And then if we can't get below the 9:30 price, right, then we expect the next 3 hours to be just trend up, right? But this is the higher probability. This has a 65% versus this that has a 34%, right? So you saying that you want to see another pump is like the higher probability, and then that rotation, that major pivot usually happens between 9:30 and 9:45. If not, then the second highest probability, 9:45 and 10, right? 10 to 10:15 has the third highest probability of doing it. That only happens like once or twice every 2 weeks, and then 10:15 to 10:30, that usually happens once a month, right? Right now, we're showing signature of the red pill, planting the high between 8:56 and 9:15, but this gets wiped out all the time at market open. And as you can see, we can't even get 10 handles outside of the first 5 minutes. So this isn't really weakness, even though we rotate it back down. We're just at the previous 3-hour midpoint, right? So it's not very convincing that we're seeing that sell off before the market open, and for the market open to do a continuation sell off. So we still have to anticipate that pump higher. But that's pretty cool because a lot of the traders, we have traders that trade the 9:30 to 9:44, which is the 9:30 model, targeting anywhere between 10 basis points and 15 basis points. But the majority of our traders wait for the 9:45 to 10 o'clock to find that major pivot, because they know they get that pivot right, they have the rest of the day to leech off of that pivot. So that's pretty cool.
Yeah, I like that a lot. Yeah, it aligns exactly with what I look for and what I'm anticipating as well. It's pretty cool. In those times, yeah, that's pretty much when I find most of my trades. That's when I look for those time windows.
And I do apologize how rude of me, dude. I'm like a technical nerd. Didn't even get into any intros. If you want to real quick, JD, before market opens here, Danny was asking, could you do a little intro for yourself, who you are, what you do, all that?
Sure. Yeah, I mean, been trading for going on 10 years now. Futures. I fell in love with futures after I started with options. Moved to futures over the years. Just have a passion for it. Love it. I trade inside Kingline. Trade live every single day. Just on a constant mission to share what I know and help others. On this ever difficult journey, and continue to progress myself. So, yeah, man, I can trade candlesticks all day long. I love it.
It's the best thing ever, dude. I tell people this too. It's like any other business, you know what I mean? You need, the more money you make, that margin of capital. It's not like just any other business. Naturally, the more money the more revenue your margins always go up, right? Usually your expenses it's like a linear relationship, right? But in trading, it's kind of like the opposite. The more money and the more capital you bring into your business, the less risk you actually have to take on to make more money. It's kind of the coolest thing ever.
All right, so we're starting to get that red pill effect, right? Before the market open, we talked about this right here. So if this is going to continue, we expect 9:30 to continue selling off. We're coming to the zone of interest where, like, I'm expecting to take bids off of, right? London OU, T12 midnight right here. So between 9:30 and 9:44, if we continue selling off, take out 8 o'clock low, all that stuff, like I expect that rotation to happen somewhere within here. Now, if we lose all this, then we talk about that scenario where Friday was an inside candle, right? So we have to anticipate us heading to the next level, which is where Asia OU is, and whatever that
Dude, that's
is settlement
a down shot.
yeah, settlement and Globex open, but like that's not the higher probability move. This is a higher probability net in feature. We expect price to come into here and find footing somewhere within here, and then to bounce back up to a new high day.
Yep, and there
So
we go. We're
being
false.
patient. Yep. You guys got to witness the red pill effect, which is a
Yep.
rare commodity right here.
Broke my heart, man. That was the
Oh,
move I was wanting market open
I
to
was going
make.
to say this was short I was looking
Yeah,
to get after
yeah.
the open. Yeah.
And you and me both.
Just sitting here watching this.
Yeah.
Slowly breaking as we talk about it.
Yep.
Yeah, I didn't account. Did you account for Asia being broken in the high day projection?
I don't usually care about Asia during long short like this. Like I'll start accounting for it once we get below this P12 mid. But remember, this P12 mid has the highest probability, so we want it to come touch it, swipe it, and then scan it, find foot. All right, market's open. All right, it's bouncing right now. Let's see if we can get actual continuation back to the upside. And if we can't come down to this zone, right, like this is a sign of strength for me, right? We start getting above market open. But look, right now, market open is 0.7, right? 10 basis points is going to line up to the downside off this 930 with this P12 midnight area too. So there's still plenty of room for us to come down, find responsiveness here, and bid off of it, right?
And hey, JD, we don't take it personal. If we're talking and you're about to get into a trade, you can just shut us up and say, "Hey, man, I'm about to, I see this."
All right. Yeah, we'll see. I'm probably gonna wait now because this is the move I was
Yeah.
kind of wanting to catch. So I'm gonna see if they melt it to midnight. You know, I might be open to a long off midnight. Other than that, just gonna wait.
Yeah, exactly.
All right.
Especially
This
since
is a really
like,
good range.
Friday was all right. We're bouncing off the 75 of the 930, right? Especially since Friday was the inside day. That's usually in ICT terminology accumulation, right before distribution. So let's see if that was accumulation for us to go higher.
If we get a break to the upside, I will be targeting extended cash flow longs right before a new high of day will be my target. If we break to the downside, I'll be targeting towards midnight open.
So we swept 6-9's range, right? And we're breaching the 50% of that right now. Like if we get above that, then that would be my signal to start buying dips.
10 seconds on this candle.
Nope, you're not going to get it.
Yes, might want midnight here.
Yeah, ES is looking way shittier. YM's already lost to 930. Russell is not showing his hand yet. All right, there we go. All right, so we can't get back to 50% of the 930 range. So the 9 o'clock candle from high to low, 50, 25, 75. And so this 6-9 sweep is now validated. So you can start buying the dips, right? I still want to see, can we? I'll wait for the next 5 minutes, right? Because this is just the first 5-minute range being developed, right? And I want to see how price responds off of this high. If 935 and the 939 continues higher, right? Now, first and foremost, can we get
it close here? We got
points?
5 seconds. 5 seconds. All right, I'm taking this long.
Yep. All right, and our gunships are taking that too. So
target is going to be new high of day, 0.12% at 909 even.
So I want to see, like, in the next 5-minute candle, can we get above this 10 basis points, right? Or is this going to be the price response for us to head lower into this zone right here?
Risk is going to be the other side of market open.
.16930. That's good. That's a good range.
I didn't even check on the gunships here. Let me see. We got everything running. I don't have the VPS today, guys. Sorry, I can't stream the gunship stuff. That'll be up and running here soon.
So me personally, I haven't seen that initial that snap that I look for to convince me, right? I definitely see the sweeper. It just makes me tell myself like I have to be patient and try to get my risk a little bit closer to 930 low or wait for this London OU zone. Testing the 930 high right now, right?
Yeah.
We get
These are my favorite.
Mm-hmm.
These are my favorite market open ranges because they're so small. This market open range is only, I think, what, 0.9%. Yeah. So if you guys are looking at my screen, this allows me to manage risk really good. So this is another scenario where I can get stopped out of this trade 3 to 4 times, and it's still a pretty successful trade. So right now it's either we accept above the RTH, make a new in statistic high of day for the time that we're supposed to, which is around 9 to 10 o'clock. We don't have to. Market can do whatever it wants to do, but we trade with probabilities. And the probability now is that where we're accepting above the RTH, we're accepting above the opening price of the market open. Now, the net, if above, then where's the next checkpoint of price? Next checkpoint of price with both time and price here is new high of day at market open.
So got a good responsiveness off that 930 high, but not enough to take out the previous 5-minute high. So that's concerning for longs.
Yeah, I'm still flat for now. I can see the long playing out too, though. I think if ES goes to midnight, I'm going to watch what happens there.
Yeah, NQ is definitely the strength leader. It's having a hard time getting back in 930. So we're rejecting the previous 5-minute 50% right now. Seeing, can we dig a little bit deeper? Right now, 3-hour order flow probabilities is bearish, right? From 930 to, because we went long false, but we're in a strong market. So we're seeing, can it pop out of this? We can't get above 10 basis points, which is concerning. That's 20 handles for those that don't read percentages, right? And that's not a real good sign of strength yet. So it hasn't shown its hand completely yet. And if I miss the move, I miss the move, right? There are plenty of hours if we want to go long again for me to capture that move. Just setting the conditions. Like we haven't taken out a 5-minute high or low yet.
Yeah.
We'll look back at it at the end of the day and be like, man, I should have bid it off this 25. And it's
Always,
like,
yeah.
yeah, that's so fucking obvious. And but no.
Like we said this morning, bro, we find confidence in just consistent execution. Winners will take care of themselves.
There's plenty of hours in the day, right? This 930 price gets responded to more times in the RTH than any other price. So
Hey,
pay attention.
Real quick, we just hit an all-time high on YouTube. JD, dude, you brought your energy here today.
Let's go, man. Nice.
200 live viewers. I think the most we've ever had was like 120. So heck yeah.
Let's go.
You, everybody.
Very cool. Hey, and he's trying to go, but ES keeps holding it back. I think ES does want midnight.
Yeah, so ES, NQ, YM, none of them could take out their 3-hour high, right? NQ is definitely the strength leader. I don't like fading the market when NQ is leading, right? Like that's a no-no.
Could be dangerous.
Or when RTY is leading, like that's telling me, which RTY is below 10 basis points, 930, so it's not so much today, but that's telling me that the market's buying risky assets. It wants higher prices for riskier shit. Like RTY, if RTY is bidding, I don't care what NQ is going because it's telling me they're bidding up junk, trash companies.
Yeah.
All right, NQ can't even get above 10 basis. ES is below 930, YM is below 10 basis points, RTY is below 10. So this is looking more like it wants to come down to this midnight price.
I don't know if y'all seen that. Alyssa came in and I was like, you're on camera, right?
All right. This is a very, let's see how this 5-minute candle closes. Obvious signature right now is that we can't get back in the 930. That usually is a telltale sign of directional in whichever direction it's going. But like I usually wait till 10 o'clock, 10:15 to make that call. Because if it's going to be a directional day for the rest of the day, which I'm not saying it is, right? Like we usually have the rest of the day to capture that distribution. Wow, it's a very doji 5-minute. These are signs of a 15-minute doji between 9:30 and 9:45, right? So that's why it's important just to wait and like be confident in your trade, right? I've already seen these characteristics play out so many times that 9:30 to 9:44 being a doji, which is the least likely, but when it is, it's like, all right, I'm glad I protected myself from that. Holy cow.
Isaac has a really good question here. Missed the start. What was the confluence for this long close above 930? Couple things. So number one, so objectively, kind of like how if you were to shoot a weapon, right? You have a generic range of a weapon. No matter if it's hot outside, cold outside, windy, whatever, you have a generic probability that a weapon is going to shoot at a basic effective range of something. When we break above market open, we have an effective range, an effective price movement of generically, regardless of anything else, 0.1 to 0.3%. Okay, so basically, if you were to imagine this box of favorable price movement, when we break above or below market open, we typically, statistically, make around this much favorable price movement. So I want you to imagine this box like that trajectory, like that velocity of a weapon. So now where does this potential I like to call it my Goldilocks zone. Where does this Goldilocks zone of probable price movement fit within the actual day at hand? So the day at hand is we have an out of statistic high of day at 8:56. We don't typically make highs of days at 8:56. Statistically, the next major time to make a high of day is right around market open. And so now if we're accepting above the RTH open with a low of day at 1800, which is an in statistic low of day, that's bullish because now we have an out of statistic high with live price accepting above. And then the final, push, the final statistic, one thing that we have in the pack is this green line. You see this green line with an 80% beside of it. This green line in the past, if I'm on the 1 minute time frame, it's past 15 days. If I'm on the 5 minute time frame, it's the past like 75 days. It's showing me an objective probability that this line has been hit like right here in the past 75 days, 85% of the time. And so now I have three major reasons for price to, at a minimum, can I get 0.12% out of the market? And so I let that 0.1 to 0.3, I let this probable price movement dictate how can I fit that high probable price movement in the specific daily candle. So I hope that answered your question, Isaac. If you got any follow-up, please let me know. If anybody's confused, I know we have two major communities right now, and probably half the people watching is like, what did this dude just say? So please, that's why we do these streams. Please ask.
There's that push.
There's that push. Yep.
Yes, midnight.
And there we go. TP hit. Boom,
Nice.
baby.
Let's go.
9:43 high of day.
All right. So now definitely looking to see, can we continue this? And this will happen during the 9:45 to 10 o'clock? Or does this, the high of the day, work? We're above 10 basis points off the 930. So good trade. So
Okay. All right. Let
that
me
definitely
see.
validates. What's up?
Let me see if I can just break this just a little bit more. And if you guys get trades or see anything, please shut me up. I want to make sure you guys understand this, because I don't want to just you guys to come into the stream that aren't familiar with what we do, and then you're just like, dude, did I just waste my time? So when we're above market open, if you take the high and the low of this market open range, okay, just this 930 candle. Oh, and here's the trade, by the way, because me, like JD, we really hate when people are just like, yeah, dude, we called it, bro. We called it. You didn't hear us. We called it, but they don't actually execute. We execute.
Yeah.
I like to share, but the problem is, JD, I'll say this just to be real. One thing that I kind of just have a pet peeve of is, number one, technical problems literally just follow me. And I hate splitting my screen to where because I chart on TradingView. And then if I try to split my screen with my Project X and TradingView, it's super annoying. So what I'll do is I'll execute on the side, and then I'll just show people if I win or lose and just post on my chart here.
Nice. Yeah.
But, okay. So this was a trade. So if I have, number one, just generic velocity, just like a weapon, generic velocity. Doesn't matter if we're bullish, bearish in the day, we're ranging overnight. Just what is the generic probability that something is going to happen without any other influences in the market? That's market open, 930, the major pivot of the day, the RTH open. If we get a 1 minute candle break above like we did today, let's just imagine this being the candle. No matter anything else, take a price range tool. Do this beside me. Watch this in replay mode if you have to. 0.1, right here, 0.1%. You see this middle? This is, and I don't use points and ticks, okay, because points and ticks become different over time. Price movement never changes. 0.1 to 0.3. And so just like we talked about this morning in the analysis, what I like to do is I dynamically adjust my expectation of my trade to the day. I don't do it based on every trade I take has to be a 5R. Every trade I take has to be 100 points. Every trade I take has to have a 20-point stop loss. No. I trade based on what objectively has the highest probability and lowest probability for my stop loss. Lowest probability, or the invalidation of my trade, would be if we got back below market open. That's where I said I put my risk. The expectation of price is if we have an out of statistic high of day and we have this generic 0.1 to 0.3% expectation of probable price movement, if we're on the right side of the probability, how can I take this box, this 0.1 to 0.3% expectation, and how can I fit it to what the day is most likely giving me? And the day is most likely giving me today anyways, the fact that what is the lowest hanging fruit, the highest probable trade. Have you guys ever taken a trade and you went 50 points in your profit and then it just reverses and hits your stop loss? That scenario right there is why I trade the way that I do. I trade the highest probable price movement towards the overall intended direction. Now, some days, yeah, like if you guys go look Monday, we'll get some pretty crazy trades. I took a 100-point trade on Friday, but today I'm just happy with 30 points because that's what the daily candle and the statistics gave me today, which was this high of day. And so if we're due for a new high of day by market open and somewhere around market open, check number one. Check number two is, can I get at least 0.1 to 0.3% if I get into this trade? Yes, I can. I can get 0.12. Check number two. And then check number three, can I define my risk? Is market open small enough? Is this range small enough to where I can actually define my risk? Because guess what? We can get TPs all day long. I just showed you guys this morning. I can randomly flip a coin back here. We made a little joke this morning. I can flip a coin and be right. So winning isn't what I'm focused on. I'm focused on, in this trade, how far does my entry have to be before it's just completely not even worth paying for this trade if I do lose? I don't care if it wins or if it's a profitable trade. And so that's check number three, is market open was only, if I take a price range tool, from the bottom to the top the high and the low of 930, it was only 0.1%, 0.09%. Okay. And so that's everything. Back to you, Mickey. There you go.
Good explanation, right? So even with the long false, right, we just broke the high that made it long false, right? So that typically leads to kind of a range 1. However, if we can't get back to, and then the secondary mode being high day, end of day, but we got the rest of the day to figure that out. Like I said, these are still probabilities that have to be accounted for to the downside until 10-15 at the max, right? After 10-15, right? If 10 can take out this high, right, and stay above 930, stay above the 50%, like, doesn't matter how extreme we might be off of Asia, right? Like, the market can continue to do a healthy daily candle to the upside. This is a extreme 1.1%, right, for the high of the day, and then we just watch it continue going until end of day, right? And this was the reason why we said in the beginning of the stream, like, our job is to buy the dips today, not sell rips, right? Because the probabilities were stacked so high, and then it just didn't come to our lower area to buy the dips. So the longs that were caught off of this 1 minute close higher, they took advantage. Right now, what I'll be looking for at 10 o'clock is, does this momentum want to continue, or do we want to come back and, you know, tighten the range a little bit, or reverse and come get these high probability numbers within the first 15 minutes of 10 o'clock?
We got a good question in the chat for you, JD. Danny here. Also, I want to hear what JD is seeing and how he approaches 930.
Yeah, I mean, I was kind of hoping for this pop to happen first and then short to midnight. But ES, like I was saying, I was anticipating ES hitting midnight. So if I see ES going for midnight like that, as much as I might want to short NQ, I'm going to stay away from that, because if ES hits midnight and NQ is the stronger asset, and ES starts to push from midnight, NQ is going to really catch a bid, which is exactly what happened. So yeah. I had to stay out of that. So just going to have to wait. My approach was mostly looking for a long back at midnight open, so we didn't quite get there, but ES got it. So I'm just kind of waiting. You guys took a nice long. That's clean.
The cool thing is like, there's plenty of hours left in the day, and we know starting at 10 o'clock to, let's say, just 10 o'clock, right? We know statistically the higher low of the 10 o'clock hour likes to get put in the first 15 minutes of that, right? Mm-hmm. So there's still plenty of cash flowing targets to, you know, capture at 10 o'clock, and we're still in a high of the day zone, meaning we can still plant the high of the day and reverse and then come on all the way back down where these probabilities are. So that's why I'm patient too.
Nice. If you guys took any trades, let me know in the chat. I've seen a few people got that TP off market open. We got Carl. Nice. Combine pass plus 300 and another. Job, dude. Z, so you waited for the breakout of the 930. Exactly, Z. Yep. And the thing is can this breakout, so even more in depth, can this breakout dictate my risk? Okay, please, I want you guys to understand that. If you don't, if you don't get anything from this stream, it's that we still, probabilities are great, statistics are great. You still need to be able to define your risk. Okay, I don't care if this high had a 90% chance of being hit. If this market open range was huge and I couldn't define my risk, if I couldn't invalidate my trade, I'll watch it go 200 points without me, because it's not my trade to take.
So for example, like out of the last 10 trading days, the median range, meaning 50% of the range, 50% of the time, this is the range, right? We've moved 266 a day, right? We're already at 230. So any longs at this moment, right, would only be for cash flow targets, like 10 basis points at the most, right? 10 handles to 20 handles for longs at this current location, right? Because there's a high probability that we are going to retrace, right? And there's no real news that says, market, it's Monday. pump it up, right? Like break the 10-day median range, right? Like there's nothing really telling me that we should have a 400 handle a day, right? So like I can't define risk right now for longs because we're in a high day zone, right? At a high of the day time, and any given moment, right? This thing can reverse on me. Right now we are setting up for a directional day. We've already been directional. But this is like confirmation, right? So now my range for 10 o'clock is going to be between here and here, 9 o'clock's area, right? So I'll wait, see, can we get the first 5 minutes to form somewhere around here? Then can we break to the downside? And then, you know, like, can it get 10 to 20 handles outside of the 5 minute the minute 0 to minute 5 off the 10 o'clock? If it can, then I'll just wait for trades around 9:30. But if it can't, I'll try to take trades around 9 o'clock's 50%, right? Because for ICT based people, that would be premium and discounted previous hour, right? And that way I can kind of define my risk. If I'm wrong, I get stopped out instantly. If I'm right, I capture that 10 to 20 handles to the upside for the 05 breakout is what we call it. But huge shout out to JD for displaying like tactical patience, right? Like, because
he could have very well came in here and been like, "All right, guys, I'm taking it." No, that's real professional, man. I appreciate it, seriously.
Absolutely. And that's what makes you a trader for the long run.
Yeah.
Doesn't look cool on Twitter, but it looks cool on your bank account. And like I tell the kids all day long, like nobody cares if you make money or not, right? Only you, your wife, and your bank account care. So do it the smart, responsible way, you know. All right, I'm
open to a potential short here.
Yeah, we're in that high of day perfectly, dude. If we're going to short and reverse back to market open, this is the time and where price could do it.
Thing is, if we push down, hold that 24,900 area, you know, I could see us turn right back up right there if it does start to sell here. So let's see.
All right, so we're entering the 15 minutes where all these high probabilities, the probability of midnight, P12, previous 12-hour mid, London OU, those getting hit are going to start falling off. Even though these are between 70 and 90% probabilities, they start falling. Those probabilities fall off after 10 to 10:15, and then after 10:15, they're completely gone. So we don't see order flow shift here, right? We've got to give up this zone and start shifting our minds of using previous hour as premium discount zones, right, to bid off of, or the first 5 minutes of the hour, right? And that's not fun.
This is something, JD, I'd actually be curious to hear your thoughts on this while we're, and don't let me distract you. But one thing that we do is there's two major types of traders.
Wait. Real quick. You said 0.17 was the MAE off of 945?
Yes. MFE, not MAE.
MFE. All right. So we hit that dead tick. Damn it. I missed it again today.
No, we still have it open. It's still open.
Oh, nice.
0.17 gets us to 982.50. It's off the, or I'm sorry.
Oh, got it.
979. It's off that 1 minute break, 977.
All right. Okay, cool. Sorry.
No, you're good, dude. There's two types of traders, right? Like if everything else with executions, and that's really like a confirmation trader, which is how I am. And then more of like, what would you even call it, Mickey? Like front run? Like what would you really?
So for me, like, so Austin likes to take the breakout of the 930, right? So 930, 1 minute close higher. I don't believe in, like, I like confirmation. And then that gives me, like, so if we're going long, I like confirmation, right? So can we take out this 5 minute high or whatever? And then my job is to buy red candles, right? Or if we're going to sell it there, right? Like, so my job is to wait for 9 o'clock to form, get the confirmation. Like, let's say we're going to take a sell. Like, we call it a footprint, but it's just an hourly wick, right? Wherever this is, let's say I get a confirmation that we're rejecting 50% of the 9 o'clock wick, and I want to take a sell. My job is to wait for it to break to the downside and then sell back up green candles. My job is to sell as close to this so I can get my risk as close as possible, right? But yeah, like there's wins and losses. So like today, like if you're the guy who was trying to, so here's your 1 minute confirmation for the longs, right? And these are the red candles, and identifying that we can't get back into the 930 range. Like your job is to buy these red candles right here and then place your stop right here. And so like today, it doesn't seem that beneficial, right? The 930 breakout or the person who buys the red candles, right? But they both waited for confirmation. They just have different entries, right? With some days, like the red candles.
Maybe that's a bad way of putting it.
Yeah.
Not confirmation trade, but like, yeah, I guess that's the way you could, like a breakout. Cause that's like one thing that I'll do is I want that, like I sacrifice trade position for trade confirmation versus like another person's confirmation would be, yeah, like what you're saying, like,
yeah,
it's a smaller invalidation, but obviously a higher risk to reward.
Yeah. All right. This is a strong close. That was a strong close.
Yeah.
Right.
Yeah. We're staying above 945, I think.
Yep.
Unless we show signs of getting below the 05 or the 10 o'clock at this point,
Yep.
I don't think shorts have we have to get, in my opinion, we have to at a minimum get below 911.
We sweep this
no
9
pun
o'clock
intended.
high. Like that's the only way shorts are in play now. We sweep here, and then like we sweep right here, break this, right? I usually use the previous hour 50, so I have data like that shows like for sweepers or raids, liquidity raids that ICT people call it. Like if you use that time fractals 50, right? So in this case, we're sweeping the 9 o'clock high. For this to be completely validated statistically, we have to breach the 9 o'clock 50%, and then to start selling rips that are going up, right? Same thing with the 3 hour, the 4 hour, right? Like it's all of that fractal game right there, and that's really good. So now, right, can we come breach this 9 o'clock 50%?
We haven't had a lot of pullbacks to market open the past.
Yeah, it's been
like
very
2
directional
weeks, right?
lately. Yeah, it's been very directional.
We haven't had a lot of version up in here.
We haven't had a lot of range days, period. We've had a lot of periods of range, but not like range ones.
Paul Kim says Q3 reversal ?
Yeah, I'm watching it. I think this could be a short here.
Yeah.
But you got to be careful. I mean, short right into a potential buy zone. So.
Well, this goes back to what we were saying, right? Like the invalidation is very small, but the reward's very high, right?
All right.
So now if you guys are new here, one thing, I'll share my screen real quick. One thing that we like to do going into 10 o'clock to see, is there going to be confirmation to where live price is agreeing that we could pull back into market open, or is this going to be the continuation? For me, I love the 10 o'clock candle, the 10 o'clock hourly candle, because it is the first foremost, it's the first full hour of the RTH. But in addition to that, because it's so close to that in statistic or at a statistic high of day time, what we can do is exactly what we said about 30, 40 minutes ago, if you guys tuned in, is that if we exchange this in stat high for an at a stat high, meaning if we start forming a bullish 10 o'clock candle and the higher we push, I'm expecting by some point a high of day by end of day. We could pull back, then make it. We could rip for the rest of the day. Who knows? But now I'm expecting a high of day by end of day. But in the short term, for just us as day traders here, one thing that I'm looking for right now is the first 5 minutes. And this is what Mickey was talking about with the 05. The first 5 minutes of this 10 o'clock hour is going to give us a little clue. Are we going to make the wick of this 10 o'clock hourly candle? which tells us how the rest of this, most likely this 10 o'clock hourly candle could print. And so I just take the high, and then we'll let the rest of these couple minutes here form. And let's say this box, let's say this represents the high and the low of the first 5 minutes of the 10 o'clock candle. Statistically, we'll have a high in Q1 and a low in Q3 to Q4. So when one of your community members was saying Q3 reversal, JD, we talk about quarters a little bit of the same way.
Yeah.
So we're due for a new low. If we're going to come to the downside here for this 10 o'clock hourly candle, this could be the wick. And then we make a new low in Q3 to Q4, which would be 10:30 to 11.
And so
a bigger 10 o'clock candle.
So because we know we're in the body of the daily candle, right? Like this, if I am going to take any shorts, I am going to reduce position size, right? And, like this is where, like, we were kind of talking about it earlier in the show. It's like, we use like statistics to find out, like, has a high day, low day been put in? Are we in the body of the daily candle, et cetera, right? Like, where's the momentum for the 3 hour, the 4 hour, whatever, right? The 12 hour. And then like we adjust our position size, right? Accordingly, right? And we adjust our TPs, we turn on models, we turn off models. Like right now, Captain Backtest just got triggered, right? To turn on for longs, right? So like depending on how far this pullback happens, like if we can get back to that midnight area, then yeah, I'll turn that model on because we've retraced enough for Captain Backtest to be even valid, because I usually target 25 basis points, which is about 50 to 60 handles, right? But right here, taking Captain Backtest doesn't make a lick of sense because we've already spent most of the daily range, right? Now, if I was to take shorts because of the lower probability today, like we talked about going the wargaming, right? It would be with reduced position size. So there's two types of traders. There's those that position size, a fixed contract size, right? I'm going to trade 1 mini every time I take a trade, right? The problem with that is you can't control your volatility, and they put their stops above or below structure. That means your stop loss is going to be different every single time, right? And you can't really control that, right? And then there's the risk per trade based off my entry size and my stop. If I'm risking 2.5%, that would tell me how much position size I need to actually go into it with, right? So typically I either do, if it's a low probability trade, like shorts are right now, right, I'll risk 1% per trade. And then based off of where my entry and my stop, so if I'm trading a $2,000 50K account, 1%, right, and my stop is between here and here, let's say the position size might be 1 to 3 micros, right? If it's a high probability trade, let's say high probability that we put the high day, low day in, and we don't have a 1800 low day locked in already, right? Then I would increase that risk per trade to 2.5 to 5% or even 10% because, and then my entry and my stop, my position size would be a lot better. But like I'd still be risking that initial amount of 225, which is that risk per trade. And we've done videos on that over and over again and talked through that. You can just look up the videos.
Somebody was asking in the chat, JD, they said, I heard JD's trading sound. Did he go short?
Oh, yeah, I took a scalp. I'm just waiting. Still just waiting for a main position here. Because I wanted to see that 5-minute gap get hit, see what we do from there and pivot but higher. There's a 15-minute gap up here around that 24,971. We might want to reach for that.
D3, what was your, if you go back and listen, I just, for the sake of time, and I don't want to just keep talking the same thing. I don't want to say the same thing. Just go back and watch the recording. I break it down very in depth. Neil's got a question for you, JD. What's your opinion on taking us to 25K first, then a sell-off?
Yeah, totally. That's totally possible. Yeah, I mean, price is strong and Nasdaq's strong right now. ES finally trying to catch a bid again. So, like I said, we might want that 15-minute gap up here.
There's definitely a SMT with ES, YM, and NQ. RTY is catching a bid right now, but we'll see if they got follow through.
So now the first 5-minute high and low has been formed, guys. So now we're just inside the 05 like we were talking about here. So this is the first signal. This is the first little live price action component we use to see is live price for this next 10 o'clock hourly candle. Is this potentially forming the wick? So like in this case here, because we're climbing to the upside because we're above the 10 a.m. open, is this the wick going into Q2, taking the high of Q1, okay, which is the first 15 minutes. And then statistically, this will be the low for the rest of the 10 o'clock hourly candle, giving us the signal that this is going to most likely be a bullish hourly candle. And then you're just thinking then. If this is going to be a bullish candle, then most likely we're not coming to the 930, at least for the next hour. And so now the edge is some sort of long. If you guys have entry processes that give you long signals or whatever, the edge is long until this is invalidated. So and for this to be invalidated, we would have to by 10:15 take the high, then come down, take the low. Then we're making an out of statistic hourly 10 o'clock candle. We don't typically make a high in Q2, then let's say a low in Q3 or Q4. So what this does is this just gives us a framework. It's like guardrails to see. It's kind of like when you bowl, you pull up those the child lanes. This is the child lane, and on the left or on the low, if we take the high and we respect this low, then most likely the high is going to be here to here. If we start breaking down, and then in this Q2, this little quadrant right here, we take the low, then most likely this is going to be the high, and then we make the new low in Q3, Q4. So still waiting. We did take the 05 box high. So now this is signal number one.
We couldn't get out at 10 basis points, so this could be possibly the Q1 high.
Let's see. We got 10. I got point. Yeah, I got 0.1 at 983. Yep.
Because it happens in the first quarter, like what we're talking about is we've done the data. Like we can break out to one side, but if we can't get above 20 handles, we'll say 10 basis points, right? And we suck back into the range, we can expect it to continue going to the downside, not the upside, within the first 15 minutes.
And we're still in that high of day time and distribution. So it's still anybody's game right now. We got to see.
But there's definitely more probabilities because we could not return to this 930 for this to be a bid all day, right?
Yeah.
If we don't reverse like right here, right now, within the next like 4 minutes, right? Like this is definitely a game for the longs. And for me, like I'm okay with just not taking any longs now because we're like 10 handles away from not hitting our max 10-day median range, right? And so like I don't buy this high up, right? Like especially when the daily distribution range is already put in.
Yep. My thoughts, Paul, if we want to go around the room real quick. I think we're kind of all saying in agreement here. But I'll say for the shorts, if you're asking if you like this area for shorts, the invalidation area is pretty low. It's just with how I trade, like I can only answer from my perspective, and I'll pass the mic to other people. But for me, it's like I need confirmation, and my confirmation for me is right now it's 10:12, so we got 3 minutes left for the first quarter of this 10 o'clock hour. If we can't get below this 05, meaning if we can't get below price level 920.25, I don't see a short. I don't see bearish intent with this hourly candle. But if we leave this high, suck back into this 05, then by 10:15 we start making our way down to take this low, then I do. So I'll say starting at 10:15, so the next 3 minutes, if we leave this high that we currently have of both the day and the hour, if we leave this high respected and we come down to take this low at 919, that's the signal that, okay, now this most likely going to be a bearish hourly candle. And then that would make sense to short back into market open.
Yeah, I'm pretty much on the same ball field because that's counter trend and against all probabilities. Like 9 o'clock's 50%, right? Then I'll start selling rips. I'll only sell it at midnight, and I'll start bidding up, or for cash flow targets, 10 handle, 20 handles. But if we can get to this zone, I'll start bidding this again, and then hanging onto these with a little bit more position size and a little bit more distance. So like captain back test 25 basis points, 50 handles to the longs, right? So off this P12 mid or midnight open, right? Like this is where I'm trying to get a good position on. the ride back to end of day, higher day. But like we have to, like I'm not buying up here, and for me to sell, we have to get below 9 o'clock's 50% and take out this 15-minute low. So I'm gonna sit and duck. I'm sorry, it's not exciting being a sit and duck.
Yeah, similar situation here. The short is really tempting me right now, but I need to see it break below the hourly open again as well, and then back below right around like 24,930-ish. Be interesting, but
we can look at this 15-minute footprint as we come up on the close. Like, do we reject it and then decline it? Because right now, this whole 5-box breakout is indicating that we should sell, right? Because we couldn't get above, if this was going to be a proper breakout in the first 15 minutes, we couldn't get above that 10 basis points, which usually tells you that's an instant high. So if that's going to be the case, this 15-minute candle wick will show its hand and then we'll sell. If we can't do that, then this is the low and you got to bid it. And we're too high up for me to bid it.
You got no business.
Got no business. I have got no business bidding it up here.
Yeah, I can't buy it here either.
But the 11 o'clock hour, let's say we continue to go up into the right. The 11 o'clock hour will have a stronger effect of that reversal, right? So same thing, third hour effect. All right, here we go. Let's see. Like
exactly, Shannon. I like Shannon. This is a new face. Trading is meant to be exciting. Absolutely.
So I'm more likely to take a short if we take out this 15-minute high. I'll just sit on my hands, and then the 11 o'clock hour will have even higher probability of reversion, which I think is pretty cool. Hope we don't.
All right, for me, now we got Q2 opening up here, 10:15. Take the opening price of the 10:15 candle. Project it forward for the next 10 o'clock hour. So I'll project it forward all the way to 11 a.m. All right, right here. There we go. And so if we get above it, if we close above, that's signal. Okay, signal, confirmation, signal, confirmation, signal is if we start getting above or below this opening, that's going to give me, okay, which high or low we're going to get taken. If we are forming above the 10:15 opening price, I'm most likely saying, okay, well, if that, then most likely the high. Same thing for the downside. If we get below the 10:15 open, in which we are right now, then most likely the Q1 low is going to be taken. And so it's just a if then, if then, if then, if then. So if we get below Q2 open, then I'm most likely anticipating the low to be taken. And if the Q2 low gets taken, then most likely this is the high of Q1, and we'll get a good retracement, potentially either back to market open or a motivation to make a new low in Q3 to Q4, from which is 10:30 to 10:45. I see Trades made a joke. Yeah, dude, you didn't hear my like over exaggerated laugh. I barely make any jokes. When I do, I gotta make it known. What's up, Dave? Good morning, bro. Good to see you. How's the BB gun doing this morning? Gunship did great, by the way. We had a home run day.
Nice.
Home run freaking day.
Explain what the gunship is. This is such an awesome concept. Explain the gunship.
Yeah. Let me open up the gunship here.
We're rejecting.
So just like,
yeah. Go on.
Just like everything else in the trading space, people like to have a bunch of fun names, right? So we had something, we created something here in the pack called the gunship. The gunship, all it is in a very simple way, if you guys see my screen, is these green lines are common areas where price goes in favor. Red lines, common areas where price goes against. So if it's long, if it's giving some sort of bullish intent, the favorable price movement would be up, and then the negative price movement would be down, and then vice versa. If it gets activated to the downside, the favorable price movement would be down and adverse price movement would be up. And so what the gunship does, and why we called it the gunship, is just like an actual gunship in the military. It's like providing oversight, right? All these different weapons, It's just providing oversight. Same thing here. Just providing oversight to show you statistical price movements within the daily candle. And so this is like algorithmically, we kind of got this set up as an algorithm to hedge my manual trading. So it's kind of like a way to diversify my manual trading. But then as a tool for manual trading, it allows me to tailor my targets. Now, you guys didn't really get to see me use it today because today was just a very clean 0.12% take profit off market open. So I didn't really, there wasn't anything calling for an extended target. I didn't have anything, or I didn't have any reason. I didn't see any reason to shoot for large extended targets today. But yeah, so if let's say I'm currently long, like let's say I was still long in this market open trade, I can use this green line to bump my TP up a little bit more, because I can see in the current market condition, when this specific gunship move activated to the long side, if you see these green lines, they kind of act like zones of where price could potentially go to. And so if I'm already long off the 1 minute, well, this is a 5-minute chart right here. And so then I can tailor my TP to where the current market condition has consistently, repeatedly moved in favor towards this move. And so that's what the gunship is.
So it's an algo that takes measured moves all throughout the day. Heck yeah. I'm liking what I'm seeing for these shorts. YM still weak. RTY is still below 930. ES is below 930 now. And NQ is losing its 05 box. Freaking amazing.
All right. JD, if you guys are looking for shorts, this is looking good.
Yeah, I like it. We're going to see what happens here if we sweep this low down into that 24,913. If we start bouncing from there, got to be careful holding the shorts.
You said 913?
Yeah, right around there.
Dude, that's
900, 915, right around there.
Right. 913 is the 945 low. That's like exactly what I got. Okay, we took Q1 low.
Yep. So let me take the screen real quick so I can
Yes, sir.
Something to your community that's statistically based, right? So we know that every hour besides, let me adjust this, every hour besides the 8 o'clock hour due to the news, 1 minute. All right, besides the 8 o'clock hour because of the 8:30 news, the 9 o'clock hour because of 9:30 market open, but every other hour in the day has statistical proof that it likes to put the high of the hour or the low of the hour. And we looked over 20 years worth of data, right? In that first 15 minutes, right? Majority of the time, it's within the first 5, right? And it likes to put the opposite side of the candle in the last 15 minutes, right? For ICT-based traders, this is why that macro is so important, right? Because like the last 15 minutes usually puts the high or low of the previous hour in, and then the first 15 minutes either continues it or it reverses it, right? And your job is to figure, is it going to continue it? And should I be buying the dips within the first 15 minutes, or should I be selling the rips, right? So now, right, how you can tell that, right, is like we take the first 5 minutes, right? And MAE, so the max in the first 15 minutes, right? This blue box represents, let me turn some stuff off. Right, the blue box represents, right, the first 5 minutes, right? And so in the first 15 minutes, right, can we break out to one side? And during that breakout, do we lose 5 to 10 basis points? So if we continue to rip past 0.10% off of the 05 high or low, right? Like, so if we had ripped higher, then we would know in the second 15 minutes, we should be buying all red candles because this supports continuation, right? But if it rejects it, because the day is strong, it's going to make me look like an idiot, right? We reject it within the first 15 minutes, like we did here, right? The 5 basis points to 10 off of the 5-minute high here, like we did right here. That's saying this is a high probability statistical high, and you need to wait for confirmation, which is here, and start buying start selling green candles, right? So what I was looking at, all right, so if that's the case, this is and we couldn't get above 10 basis points, so 10 to 20 handles, just think 10 to 20 handles off the first 5-minute high or low breakout, right? Since we can't do that, in the second 15 minutes, like here's your 15-minute wick, and I'll talk about the wicks because I know that's important to you guys, right? Draw it across, and do you get rejection on that? And you can see right here we did, right? So there's that, right? Yeah, so that's a quick little trick that you can use each hour to kind of identify it. Now look, like I can't sell this because my rules say like this is not a proper sweep until we breach the previous hour 50, and then I can
Yeah.
start selling dips, right?
And we
And this
wicked
is
it. We wicked
and
that Q1
yeah,
low.
we wicked it and
Mhm.
we sucked right back into the range. Like so,
Yep.
like this is important. I'm telling you, I'm waiting for the 11 o'clock hour. I'll sit out this hour. It's not cool. It's not fun. Yeah, I wish I could take a 100 handle banger in front of you guys, but I'm not gonna jeopardize my hard work of weeks and months of discipline just because I'm live trading in front of you guys. So I'll have to sit here and wait and be patient, just like JD is, and just not take anything because, like, I'm not gonna buy at the top of the daily distro. It's not
Wait,
cool to me.
wait, Mickey,
What's up?
you're not still short?
I've never been short.
I'm still in this from 929.
Well, cozy, crypto, Tippy, like, are y'all still long? Tell me y'all are still long from 1800.
Oh my
We had, so I'm gonna share this real quick, right? Because it's so
dude.
cool, right? And this is a good little indicator for. Oh, it's not indicator, but it's good for you guys to know. But
They're still long. I'm gonna buy.
I want
an
to show you
in-day.
guys this. All right. So last night, right? So let's look at this on the 15-minute chart, right? 15-minute chart, and this little tool tells us the extremes of stuff, right? So we put at 1800 a 12-hour cycle, right? So from 1800 to 06, right? And then it's a Monday, right? 15-minute, and we're going to target the last 50 Mondays only, right? And so over the last 50 Mondays, like don't think of this as like buying or selling just because it's a red candle. Think of it this as the extreme. So this represents, right? If we think of the 18 to 06 like this, right? This 12-hour cycle as such, right? Everybody knows that pattern, right? And we'll say that the 1800 price is right here, open, right? So what this red part is telling us is over the last 50 Mondays, right? Between 1800 and 1815, we put the MAE in. The MAE for you guys is known as manipulation. And then from 1815 all the way to 4 o'clock, and then you have 3 separate modes, right? One at 3:15 to 3:30, one at 4 to 4:15, and one at 5 to 5:45. You have the MAE, right? So, or MFE, for you guys it's known as the distribution, right? So we saw this last night that, hey, it's Monday, and we like to put the manipulation. I'm just going to speak y'all's language so I don't confuse you with MAE, MFE. Just think MAE, manipulation, MFE, distribution, right? So we can see over the last 50 Sunday nights, right, we like to put the manipulation in between 18 and 1850. We've done it 30 out of 50 times, right? So when we come over here on open, we have our 1800 open price, and like medians are just 50% of the time. Modes are the most common, right? We can see that the median, 50% of the data plus the mode, the most occurring, happened at 1800 to 1850. So a bunch of the traders in the pack last night saw this and went long, right? You can use previous Friday, you can use whatever, right? Now we didn't expect for it to be this fun of a long, and then it lined up with the low of the day as well. So we were expecting low of the day 1800 to 1850, and just knowing to buy the dips. Now we're at the extremes where it's like, dude, we've got to wait for intraday, high of day, because that's what data is showing us now. It was either going to be 930 to 940, or it's going to be 15 to 1600 for the high of the day, right? Which is why you don't see me bidding, right? But the cool thing is you had plenty of confluence. So let's go look at some different things that we could have seen. at 1800, right? What was here?
Hey, Mickey, real quick.
What's up?
Somebody said in the chat, can you talk about current price? I'll just give you guys an update while Mickey's going through that. So we wicked below this Q1 low. And so this is a pretty common signature that when we take this low and suck back into the Q1 range, this is now we're most likely going to make potentially an out of norm hourly candle, which means maybe this Q2 low and maybe a Q3 high to Q4 high. And so now there's no edge really for me in this hour. That's why there's not really anything else, because unless we come back down here and get below the Q2 open at 956, I don't have any crazy direction. If we get back below it here, I'm still in favor of shorts. I still think there's edge in shorts, but the moment we come to take this Q1 high at 975.25, it could be a doji hourly candle. My strength isn't doji hourly candles. It's these good, strong candles that make a low in Q1, high in Q3 to 4, and vice versa. So that's just a little update. There you go. Oh, yeah. You are muted, Mickey. What's up, JD?
Not a lot here to do at the moment.
Yeah, so right here is previous day high. So this is your little SMT that happened at 1800, right? NQ's taking the high, right? YM and ES couldn't. Like when you have a strong NQ, you never fade it, right? You have your first 15 minutes, you have your whole 5 box, you have Q2 locking in this as a Q1, and then rinse and repeat. You get your perfect 3-hour line where all 05s were respected, playing it below the hour in the first 15 or in the first minute, right? And you just keep breaking out to the upside, right? Supporting that MAE or that manipulation that happened at 1800 to 1815, right? So that was pretty cool. Another cool thing, since you guys trade quarters, right? So let's talk through this, right? Let me erase some of the straw lens, right? If you breach, like, so right now, if we were to breach this 1009 right here, right now, after taking out the Q1 low, right, we would expect an hourly doji. So if you breach a Q1 high or a previous 15-minute low that you shouldn't be breaching, like, let me find one. There's a good one, right? Nope, we didn't breach it. All right, right. Yep, right here, right? So this is the 5 o'clock hour. Right here in the second 15 minutes, we lock in this as a Q1 high, and then we come breach it, right? Whenever you do that, you can anticipate the hour to more likely be a doji than directional. Right now, this one, the close was down here, but more times than not, like when you breach a quarter that you're not supposed to, it leads to that time fractal quarter or to be a doji. All right. Yeah, that's what I have. I do have to jump here in about 15 minutes. Got a meeting with
no worries, man.
Profit.
William asks, do you track daily ranges and standard deviations today? Aligns with a 0.5 deviation at 903. How often do month-end flows diverge from a statistical baseline?
So that's a good question, right? Like on bullish months, right? Like usually, like the statistic is the 30% of the monthly range. Meaning, let me jump over to this chart, right? So you can see it, right? So this is the last trading week of the month. This is the 30% of the month line right here. It was like 85% of the time, if you're in a bullish month, right, the last week of the month, you will not be below this. If you're in a bearish, you'll be above it, right? So bearish months, right? So let's go to a monthly chart and turn this off. Actually, let's see if we can keep it on. Looking retarded. I'll have to replot that. Right, so if you take the whole month's range, like on a bullish month, you won't get below that 30% of the range mark, right? That's why last week it was easy to easy to buy the dip today and even last week, because it was like, I know next week, like this is going to be a bullish month. We're above NFP Friday, we're above previous month 50%. So the likelihood of us closing above the monthly 30%, right, range is high. And That's what we did this tonight. But then the same, so like if you look at these monthly candles, there's not many, let's do it like this. There's not many green candles that suck back in the range 30% of the time, but there's a lot of red candles, so black or red, right? And this is just an anomaly. Actually, no, it's not, right? Like there's a lot of red candles that will close back in that 30% of the monthly range those last 2 weeks of the trading month. And then like to kind of answer your question, you can do this on yourself, right? You can take the VET, which is a free indicator that me and TFO made, right? You can plant wherever, like you guys use breakers, right? So let's use this breaker right here, right? So this is a 15-minute breaker, whatever, right? You got the high, the low, the higher high, and let's pretend like this is a snap. This is a bullshit snap and breaker structure, right? But we're gonna pretend, right? So we come over to the VET, right? And we can say from the time that the breaker was made, right? So from 10:04 to 10:09, we'll put that in here. To 10:09. This isn't gonna work because fuck. I'll make it work. And it's not working. Damn. Oh, it's on Friday. Let's do Monday. That way it works. Right. So if you did the whole standard deviation game off of this, right? This would be the breaker. This is the 1. This is the 2. This is the 2.5. This is the 4. This is the 4.5, right? And whatever time frame you're trying to do this on, and it's not working. Let's go to the 5-minute. See if it fixes itself. Right. So yeah, we pretty much captured the breaker, right? So now, right, what we can do is you're going to come into the settings and you're going to line up these projection levels with where your 1 is, right? So let's go 2, right? Find out where that plots. All right, let's go 1. All right, so 1 is right here, this dotted gray line, right? So you can see that over the last 16 weeks, whenever you had a breaker that happened at this time of the day, we've hit this 1 93% of the time, right? And we can adjust it even lower, right? So let's do 1.4 to get it exactly on that 1. All right, so let's do 1.2 or 1.2, yeah. Let it adjust. There we go. So 93% of the time first touch, right? We can do the same thing with the 2 and the 2.5. So we're going to come back in here where it says projection levels. We go 2.5, right? So it's saying at the last quarter, and we're doing a lot better work with this kind of stuff, right? So around here, we can see it's hit 85% of the time, 87% of the time, right? It's hit this level by the end of the day, right? So you can use the VET that way, and then just find whatever. So like if you want to do a fair value gap or an order block or whatever, right? That's how you do that. Hopefully that answers your question. This is called the VET. It's open source, so if you want to come change the code, you can. And then obviously I just gave you a class on how to use it, and then we did a very detailed description about how to use it in here as well, right? So all you have to do is mess around, right? And you want this to be on the higher time frame because it is TradingView, right? We have dashboards that do this. They actually say bearish versus bullish or day of the week. But if you're going to use the VET on TradingView, then you want to do it on the 15 minutes so it can do the far look back, right? And then you need to make sure that this is always on the resolution time frame. So we put it on the 15-minute. And so now we know once it updates, and it's not updating. So yeah, just get in there and mess around with it. I'm not going to do it on live stream, but that's how you can put a probability behind your live price elements. So hopefully that was helpful.
Real quick, we do have rejection off the Q3 open.
Yeah.
Okay, we have still failed to take the high. So This is still giving signs of a bearish hourly candle. It's not giving the most prettiest.
Yeah. Yeah, we still can't break out in either direction. Just accumulation.
So this rejection off the Q3 open with the respecting of this Q1 high, and then we still have this Q2 low taken up, and until live price tells me, meaning we come back up here and say, nah, we're not. It's looking like we could have a nice little flush.
Yeah, I agree. I think we can go down to 24,913-ish.
930. Yep.
See what happens there.
913. I think that's also close to the 9 o'clock's midpoint, right? Let's see. Previous hour mid is here at 901, 900 even. So yeah, that's a good level.
Still holding for now, though.
Dude, Monday streams have been just fun.
Yeah. And I do want to say this real quick. I appreciate you saying this, Jeff. They said, I really appreciate you taking your time to explain while the market's open. We're trying not to be like super teachy during the live streams, but also we understand we have an influx of people here that don't really probably understand the way that we trade. And obviously we get little new people almost every week. So we just, sometimes on these Monday streams, especially after we took the trade, like I took my trade this morning, I don't really see anything else for the day. So we kind of use this time to, if you have any questions or anything, because for me anyways, if I'm ever watching somebody trade, my biggest frustration is like, I want to know the context, why they did that. And so we try to do that. We try to like overly explain so that way you guys understand what these lines are. We don't try to hide anything. We're not one of those people on there on social media. It's like, this low looks interesting. and then have no context why the low is interesting.
Or this high is amazing. They like to do both sides of the story and then not trade it.
They'll say, they'll be like,
boom, told you.
Hold on, where's the? They'll do this right here. They'll be like, here, I'll just imagine this is the eyeball emoji. They'll put an eyeball emoji here and then an eyeball emoji here. And they'll be like, They'll just say something very vague, and then one of them are going to get hit, and they'll be like, "See, look, called it."
Are you taking a short, JD?
Thinking about it, but still being a little cautious on the short side here.
Yeah.
Yeah, and JD, I'm sorry if we're, please, like Isaac said, let's hear from JD and his, like
it's kind of accumulating. So
anything you want to say?
Yeah,
kind of just building a range at the moment.
Yeah, exactly.
I wouldn't mind trying a short here. I mean, this would probably be where I would try it right here, but I don't love it enough. I don't love it enough to take it right now.
The ducks are quacking and they're feeding them. They keep bidding it off of every possible what that you want to see. So you want to wait for the obvious displacement, right? There's no obvious displacement here for shorts, right? That's the thing. And like I learned this a long time ago, right? Like after taking thousands of trades, right? Like I save a lot of commission and a lot of fees and a lot of just stop outs by waiting for that right displacement, right? And so like Captain Backtest, we use the 15-minute candle, close above or below. And people are like, you missed half the move. But guess what? Like over the next 1,000 trades, it saved me from a shit ton of losses, right? So yeah, I might have missed half the move, but I'm still going to capture the 25 basis points that I'm trying to target, right? I'm going to do it in a more conservative way. And that's the problem with younger traders is every single wiggle on the 1 minute fools them, right? The live price is clearly telling you we can't even get below previous hour 50. We can't even get below a 15-minute candle low, much less close below it. There's no sell to be taken. And if you are going to sell at the very top like this, like let's talk position sizing, right? Like I tell all my traders, when we enter a high day, low day zone, your job isn't to blow your load right there on the spot, right? Like you can start a position, but then if you got it right, you got the rest of the day to add on to that position and take advantage and leech off of that reversal, right? But right now, I'm not seeing anything that tells me that I want to sell anything.
Hey, we got a trade signal in the chat here. Golden Ratio Capital. I like that name, by the way. Short 995, true week and 2.5 standard deviation. So golden ratio is short, 995. Wait, you're short 9.
Yeah.
How is that possible? What do you mean short 995?
Maybe
Or
he's
you
on
mean when we
PFD
get
or
to
what?
995? Oh, that could be it too. I was like, wait a minute, that hasn't even printed today. Golden ratio. He's so golden. He's speaking from the future.
That was the future.
Yeah.
This market is very difficult to short. Guess what? That's why we wait. Wait.
Or you don't.
Nick says something
don't.
very, very good. He says, wait until it's obvious. And if it's not obvious, it's okay. Stay flat.
And so that's one thing that I do that most people don't do is like when I do my war gaming at 5:30 in the morning, I determine like, listen, like your job today is to buy or your job today is to sell, right? You're not to do both, right? Because trust me, I can buy the dip and sell the rips with the best of them. But like from a trade management standpoint, from capture and distribution, like my job is not to do both, right? My job is to either buy the dips or sell the rips. And right now, right, like I'm not going to buy the dips here. And like I still stand when we get closer to 930, when we get close to P12 mid, like if we want to even get back this low, which right now we're set up for a directional day up, right? So we're not even coming back to the 930 price. What makes me want to even buy anything or do anything right now, right? Like this is just one of those days where I'll sit on my hands and save myself all the business expenses. And then if we just magically happen to sell off and come to these levels, yeah, I'll dip my toe in the sand and try to bid it up for an end of day high day.
I'm saying if price comes, oh, gotcha, Golden, gotcha. Can you explain what is on your screen? Golden ratio. I'm not saying this to be rude or anything. I've explained it like twice. So if you want to like watch the recording or right now, if you want to go back in time, I've explained. I just don't want to reiterate and then drag the stream out, and I want to give everybody equal chances to talk. So, but I have already explained it. So if you want to go back and watch it, feel free. And what I like to do is throughout the week, if you guys want to subscribe to the channel, I post snippets of these live streams throughout the week. So like that will be a key component I could post. All these little key moments we've talked about, I'll make them into short videos. You can go back on my channel and watch like they're sometimes 3 to 8 minute long videos. Like if you go back last week, we actually talked about this quarters. If you go to my channel, there's a 9-minute video I posted 1 week or 2 weeks ago talking exactly about breaking things into quarters. Talked about it there. I posted another video talking about how I trade the market open in relation to the P12 mid. Posted like, so there's a bunch. So
wait, 9 minutes?
Absolutely.
You expect me to spend 9 minutes watching your video for me
at 1.5 speed? It's like 4:30.
Like absolutely not. Like I manage live capital. I don't have time to study. All right, dudes. I've got to jump. I've got a client meeting in 15 that I got to prep for. So listen, like thanks for jumping on, JD. Like mad respect. You know, I've got nothing but love for the Keen Line community, and I absolutely love what you're doing over there, man. This was awesome, and I look forward to like spending some time over there with you, man.
Thanks,
and
brother.
For us to do
Likewise.
this more often. All right, man. Later, Austin.
Yeah, man. Have a good day, bro. I'll talk to you 1 p.m.
Yeah. 1 p.m.
Okay.
All right, later.
See you, man. Yeah, and I'll just echo what he said, JD. Like seriously, anytime you want to come up here, feel free. We're trying to do this as a regular Monday thing. And actually next year we're going to try to do kind of like a bell to bell stream of just on Mondays of all the different traders in the community.
Nice, man.
And they'll like, you know, like they'll trade the London session. I think you kind of do something similar, right? Like you have different people like around different sessions. So yeah, we're going to try to, there you go. So yeah, we're going to try to do that on Mondays where if anybody kind of wants to see statistical based trading starting at the beginning of 2026, and this is kind of like leading up to that, and we're trying to, you know, get all the bugs and kinks out now, is we're going to have bell to bell streams for the major sessions of the days, and then have people like you come up here that you may not trade with statistics or specifically the same way, but I find one of the coolest things that you can learn is to see the differences of perspectives, because those differences is actually where, in my opinion, we learn the most, because that's where we kind of take things and mold them to ourselves. Like if I hear JD talk about the 7:30 a.m. open, defining if we're going to go back to midnight or not, and then I hear Austin saying midnight has a 65, 68%. Well, he uses statistics. This guy uses live price with an opening price. How can I find what meets in the middle to me and what makes sense to me? You know what I mean? I think that's the coolest part about this entire business, is you can take bits and pieces of other people, kind of like mold it into your own business. It can be completely unique to you.
Yeah, absolutely. There's tools you can pick up and put in your toolbox from everybody. Absolutely. No matter how you trade.
I got a question here. While we wrap up the stream here, because usually, oh, my camera died. All right, so we're going to go to camera now. Usually we end the stream around 10:45, 11. So as we're wrapping things up here, what is the best and worst condition, since you have so much experience now with how you trade and the edge specifically, what is like a day where everything is clicking with your edge, and then what is a day that is just super non-conducive to your edge?
Oh, good question, man. Yeah. Well, I'm kind of a reversal trader. So I trade a lot of reversals. So I like to have like the high volatility days that are kind of just all over the place. Like, the really rangy days. I like those, or really volatile days. I like those for turtle soups. But those slow, really, really slow, grindy days are my least favorite. I don't like those.
Yeah, I feel that. I'd say that is equally mine, with a caveat to days. Honestly, and you're seeing this in real time. This right here is my biggest weakness, is when we have, which is hence why I'm out of the market and I'm flat now, is we make a really good potential. Like in this case here, when we took Q2 high, when we have that clean follow through of some sort of ranging environment, that's like my strength. But then this, what we did right now, this is the opposite.
Yeah. Absolutely. Yeah. When we start to do these kind of things, I tend to like, I'll do more of a scalp to a key level, go break even, see if I get continuation,
So let's see. So looking at last week, was Thursday one of your really good days?
I forget how Thursday. I think Thursday and Friday were good. Yeah, both pretty good.
Yeah, they were really good for if you were a reversal / mean reversion or some sort. Thursday was a home run day, because we did that. Look, I mean, Thursday we made a beautiful in statistic low of day, and then just boom. Oh yeah, look at that, Henry. And I promise this isn't. We don't try to sell you guys too much. We're not salesmen. We're not marketers, but we are trying to create a business of showing what we do ethically. I think anybody that shows how they trade, I think one of the coolest ways to do it is to see them do it live, and that's what we do here. So if you want to see if you had any questions and want to understand what we do and how we do this, it's $100 for 3 months. It's not reoccurring. It's just a one-time $100. And the next boot camp starts on October 18th. Yeah, October 18th. So in like what, a week, 2 weeks? The current boot camp class is actually graduating this coming Friday. And then we'll have like a 1 to 2 week limbo period. And then we'll start back up. And it's a 3 month. It's I'm not going to lie, it does take work, because we're starting from A to Z. We call it boot camp for a reason. Just like when you join the Army or any branch, you're not just going to magically become a super soldier at the end of boot camp. What boot camp does, it provides you the foundation, a good, strong foundation to build from. So we're not promising you're going to be Lambo driving market makers by the end of 3 months. That is not what we're promising, or even making a guarantee or a promise. What we are showing you is the process that we do, how we use the statistics we use every single day, the tools that we use. And then if you want to continue with what we do, that's what the Pack Trade Group is for, where we live trade Monday through Friday. Fridays we actually take students and say, hey, you're going to do it. So we actually do a community live trade session on Friday where people in the group come and share their screen and execute and call price live. So then that's what the Pack Trade Group site is for, is once you graduate boot camp, now you just want to sit and repeat it and see it every single day. And that's what we do, is we live trade it. So if you want to join the boot camp, QR code's top left. What's up, JD?
I was just saying, yeah, a lot of respect for you guys because you actually live trade as well. You know, it's just not done enough here in the industry. So it's, yeah, I have a lot of respect for you guys for doing that.
It's the same equally goes to you. I mean, that was my biggest frustration when I first even like learned about this stuff, is like, actually the first trader I ever watched, I'm sure a lot of you know, was, what's his name? Trades by Matt. He's a pretty cool dude. And I would watch a bunch of these people trade live, but that was like the first one. But I'd watch a bunch of these people, and dude, the thing in the back of my mind was like, if these people have enough courage to just share their screen and say, this is where I'm going long, this is where I'm going short. But then you go to Twitter or Instagram. I don't really mess with Instagram, but you see it equally over on Instagram too. But you see a lot of these social media platforms, these people, they claim they know how the market moves. This is the way the market is. This is my strategy, and my strategy is the market, and blah, 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 blah. You have all these people speaking with so much confidence. I'm not asking for a track record. I'm not asking for, let me see your tax statements to know how much your net worth is. I could give two craps. What I care about and what I find the most value in is, how do you fight? You can tell me, you can teach me how to fight all day long, but how do you actually take a punch? When you tell me this is how you actually fight, can you actually do it? And then can you show up the next day and do it again and again and again and again and again? That, in my opinion, is one of the most foundational ways to see if somebody that is teaching you something, how they can use their edge when they're under stress, when time actually counts. But then also, how do you learn that edge? How do you learn from that person when, because we can teach cookie cutter, copy and paste examples, which does have its merit, but then you have to be able to apply it as these candles are moving without you knowing what they're going to do. And I think that's where live trading is just, I don't think nothing can beat it, you know?
Yeah, you nailed it on the head, man. And it's not just for like being a signal bot, you know, just try to catch winning trades. It's actually the opposite. Trading live actually does the most value for, you know, if you call yourself an educator, it's important to show the value of how to take a loss, you know, how to manage your capital properly. That's where like the true value of live trading comes in.
Yeah, fully agree, bro.
But yeah, it was good joining you guys, man. Sorry we didn't get a lot of trades. That market open long was fire, man. It was clean.
Thanks, dude. Yeah. Yeah. Don't apologize, dude. No apologies at all. I tell people all the time, sometimes we'll do these Monday streams. Dude, listen, I've had my fair share of looking like an absolute just fraud, like coming up here and being like, I couldn't get 10 points to save my life. Like, it happens. Like, sometimes but sometimes you get a clean one and done trade, and there you go. That's another part of trading that we like to show in the live aspect, is like knowing when it's enough, right? Like that. It's boring and unsexy, but that's what real trading is. Just saying, I'm done. I don't have to do anything else. My customers came to my business, paid for my product. I'm not going to, when they're leaving, come back and say, hey, can you come back in and buy some more stuff? No, my business plan worked, right?
Absolutely.
But all right, man.
Cool.
Do you have any final thoughts? Do you have any final JD wisdom you want to impart on these people?
I mean, just, you know, you got to zoom out, man. Zoom out, bigger picture, and make sure that you're able to accept the red. You know, that's the biggest thing in trading. Just be able to accept the red. Don't try to force green all the time, and let statistics play out, probabilities play out over the course of, you know, a long period of time. Respecting your risk management, man. That's the sauce.
And Robert said you have the voice as Jake Shields. That's
thank
dope.
you.
Well, JD, bro, I appreciate it. Like I said, you're welcome back anytime. I'm probably going to bother you again and say in another 2 to 3 months, get back up here, because this was fun.
You can hit me up anytime, man.
You have a good rest of your day, man. Appreciate it.
All right, guys. All right, take it easy.
All right, guys. If you all have anything else, any final questions, I'm going to stay live here for probably about another 5 to 10 minutes. Just I like to, as we do these streams, I like to kind of give you guys one final little piece of value to carry into the rest of the trading stream. or in the rest, I'm sorry, the rest of the trading session. And so because this 10 o'clock hourly, and you guys even, you can go back and watch the stream. Once we wick this, and up here I said, this is most likely going to be a doji hourly candle, and look at exactly what it's doing. Look at exactly what it's doing. Sideways doji candle. This wick right here, when we take the high and the low of Q1 and just wick it and suck back into the range, this is signal number one that this most likely go. I actually challenge you guys, if you guys struggle trading hours that are wicks, which most people do because they're hard, because what is a wick, a doji candle? It's can't decide a direction, and so usually that chops a lot of people up. So if you want a cool little exercise, go on the 60-minute time frame, and I have so much confidence that this could help you. Go to the 60-minute time frame, pick any doji candle, any doji candle, and you will find one or both very, 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 very common signatures that this is most likely going to be a doji candle. So we'll pick, watch this. I couldn't even cherry pick this if I tried. I'll pick just a random one. Boom, right here. 2200, 18 September. If I go into replay mode and turn this, go to the 1 minute time frame to build it into quarters. So 2200 candle, right? So if I go 22 to 23, let it play forward. Let the first high and low of Q1 form. Boom. Here's the Q1 high. Here's the Q1 low. Let me move this out of the way. Q1 low. All right. If we take this low, suck back into it, key signature number one, or the same thing for the other side. Key signature that it's going to be a doji. And look, it's exactly what we did. We came into it, immediately sucked back into the Q1 range. Rest is history. Doji candle right there. And so if you know that you're weak, okay, if you know that you are a weak doji candle trader, if you're not somebody that's just taking 10 points and done, or if you're somebody that you get chopped up a lot in a potential doji candle of an hour of any kind, take that with you. I hope that is something you can just go and back test yourself and see. It's a very, very, very repeatable and common thing that these hourly candles like to do when they give us doji signs. But then here's the other side of the coin. When we do form a doji candle, statistically, we don't do that more than we make a normal, just solid body candle, right? Like if you go to the, I don't even have to show you a spreadsheet, just go to the 60-minute chart. Do you see more doji candles or more solid body candles? You see more body candles with large bodies. So if that's the case, well, statistically, if we mean revert to that statistic, meaning if we're doing this, now we're due for a good strong candle of some kind. So going into the 11 o'clock hourly candle, what I would be looking for is, now, are we going to continue or reverse? And so how do we continue? How do we see what live price is going to do, whether it's telling us we're going to have a continuation or a reversal? Same thing you guys watched me do when I broke down this 10 o'clock hourly candle. Going into the 11 o'clock hour, take the high and the low of the first of the previous hour. So here's the high and the low of the 10 o'clock hour. I'm just making a box to show you guys this is where the midline is, this midpoint right here. All right. We have the high of day still in an in statistic high of day time. So we still have not came up and traded an in stat high for an out of stat high. So the shorts are still, I know how crazy this looks. I know we're looking I know the momentum's up. I get it. But statistically, until we come up and take this high, this 1009 high, this is still, you see this box right here, this is an in statistic high. And so to see if this is now going to confirm and reverse or continue to go higher, number one, I want to see the rejection off this previous hour midpoint right here, which is at 946.50. That's signal number one. Signal number two is I want to take the high and the low of the first 5 minutes of this 11 o'clock hourly candle. And what if we start getting a rejection off here and a break below the 05 of the first 5 minutes of the hourly candle, that's signal number two of potential of a potential bearish hourly candle. and this could potentially be the wick up here and blah, blah, blah. You guys get the point by now. And so then you're just thinking if then. If we're going to most likely show a bearish candle, then most likely we're going to come down to retrace to market open to make that. Vice versa. If we break this previous hour mid, if we break the 05 box of the 11 o'clock to 11:05, then we're most likely taking this at a stat high to make or in stat high to make an at a statistic high. And then if we make an at a statistic high, the final time is a new high by end of day. And that is what I see. That is what I see, ladies and gentlemen. Absolutely, Costa. Absolutely, absolutely. Risky trade. Good to see you guys here. Hope you guys had a great stream. If you guys do, if you want to help support the stream, like I said, just get this out here. Share my Twitter link to the stream so that way people can come back and watch the replay if they want to. It's right here in the chat. Dang it, I was muted. I'm sure Drez is giving me short vibes right now. Is Drez short? Let me know in the chat, Drez. Are we short? Are we long? Are we short? Give me a signal. That's a opening range. Yes. Yeah, basically, Golden. Yeah. You're basically taking the opening 5-minute range of an hour, aka the 05. And if statistically we're going to make, the high or the low of the first quarter, well, the catalyst of that is most likely the first 5 minutes. And that's backed by statistics. So I'm not just telling you, well, I feel like it. That's a statistical repeatable thing that you can go and verify for yourself. Golden ratio. I'm telling you, bro, I don't know who you are. This is the first time I've seen you in the chat. You're going to love, okay. I'll end you guys with this because now it's 11:05 and we're going to wrap it up. Go to my Twitter. Let me share my screen. All right. Go to my Twitter. Link is in the description of this live stream, or at least it might be. On my Twitter, go to the highlights. It's the first one right here. How to read a 4-hour candle, stupidly simple with statistics to back it up. If you click on it, I actually dropped the videos as well. Or if not, maybe I quoted it. Might actually have to post the video. But on my YouTube channel, I also go over this in the video. But if you just want to see a very simple, you can even take a screenshot on the video here. Either way, this is a very in-depth, like one post. It's not a super long thread. It's just very simple. If you want to read, a lot of people like 4-hour candles. And so I did the same thing I'm showing you right here on my chart. I'm just going over it here with the 4-hour candle context. And obviously using the 10 a.m. as the example, because a lot of people trade the beginning of the new 4-hour candle, which is the 10 a.m. open. If you want to see that applied on my chart, and this is how I'm going to end the stream right here. If we take 10 a.m. to 1400, 10 a.m. to 1400. All right. Statistically, the first quarter of any time horizon, it doesn't matter if it's an hourly, 30-minute, 40, or anything that can be divided by 4. The first quarter statistically makes the high or the low. And so if we're talking a 4-hour candle, the first quarter of that 4-hour candle is 10 to 11, right? Okay, so then we just project the low and the high. Same thing. So going into this 4-hour candle, we still haven't taken either side of this first quarter, but look at what we're about to do. We're getting bearish distribution. I know this doesn't really relate to you guys, but this is something we have in the group. This shows me objective bearish distribution in the market. That's signal number 1. Signal number 2 is now, let's see if we get below Q1 low. If we get below Q1 low, for the next 4 hours, I can anticipate this high being the rest of the high. And so then you just think if then. Well, if I'm bullish, I may not want to be bullish until at least this gets invalidated. Now, if we take this low, we're most likely making a bearish 4-hour candle. And if we're making a bearish 4-hour candle, then this is the wick of the 4-hour candle. Statistically, we're due for a new low in Q3 to Q4. And so if we close and body below this Q1 low, then I'm expecting shorts back to market open, because that would be the natural path of this 4-hour candle to be created, right? And then new low in Q3 to Q4. So I hope that makes sense. Good question. Good question. Anybody else? Any other questions before we wrap it up here? Carl's a 3-hour kind of guy, and that's perfectly fine. You can do it with the threes too. You just split it into thirds instead of quarters. Yep. All right, ladies and gentlemen, I hope you guys have a wonderful, wonderful rest of your day. I'm going to sign it off with some custom music we got made here for the stream. And that's about it. Guys, we say this at the end of everything. Stay grinding on your freaking goals and never, ever let anybody tell you. Somebody tried telling me long ago that I couldn't make money in these charts with spreadsheets. They said, I have to know how the market moves. I have to know how the market makers move the market. And if you use Excel spreadsheets, you don't know how to trade. Somebody told me that once. And so never, ever let anybody ever tell you that you can't do something they never done themselves. And I'll see you guys later. Bye, everybody.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women, you losing. Do this shit for yourself. I do this shit for myself. They not like us, and they know that. They not like us. We ain't gon' do. They not like us, and they know that. They not like us. We ain't gon' do it. My style is the bomb, daddy bomb. My style, my style is the bomb, daddy bomb. My style is the bomb, daddy bomb. My style is the bomb, that style. My style is the bomb.